Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera, Om Swastiastu, Namo Buddhaya. Excellencies, distinguished guests, ladies and gentlemen, peace, God's mercy, and blessings be upon you. Alhamdulillah, we express our utmost gratitude to Allah the Almighty for His leave and munificence that we gathered here today for the second day of the 5th Aifc, the role of Islamic finance in promoting economic recovery, enhancing productivity, financial stability, sustainable and inclusive growth. It is our pleasure to be meeting you again as your Master of Ceremonies. My name is Lisa.
And I'm Risminda.
We appreciate you for taking off your time of your busy schedules to join us today after previously attending yesterday's session, in which we had a guest lecture from Ibu Mari Elka Pangestu, a panel session on the topic of sustainability and inclusive growth, as well as presentations from the top 12 papers. The video of the session day 1 is available on our YouTube channel, so if you wish to follow our day session, you can go to our YouTube channel, BKF Kemenq, to access the full day session.
On behalf of the organizing committee, Ministry of Finance of Republic of Indonesia, Islamic Development Bank, Universitas Indonesia, Ikatan Ahli Ekonomi Islam Indonesia, Komite Nasional Ekonomi dan Keuangan Syariah, World Bank, Asian Development Bank, International Monetary Fund, and Masyarakat Ekonomi Syariah, we wish that you all, excellencies, distinguished guests, foreign and local participants, still find today's program we have lined up for you today to be fruitful and engaging. Excellencies, distinguished guests, ladies and gentlemen, we have a great day ahead of us with 2 promising panel discussions. Today's conference will have 4 parts. First, we will be learning about how to optimize Islamic finance in the post-pandemic era from our guest lecturer, followed by announcement of call for paper winner. And then, we will explore Islamic finance perspectives in addressing COVID-19 stress to the financial system in the first panel session. And we will also have a second panel session in Islamic finance's role, participation, and potential in supporting sustainable and inclusive growth.
All sessions are available in both English and Bahasa Indonesia, and you can access simultaneous interpretations in Bahasa Indonesia from the globe button at the bottom of your Zoom window. And eventually, we will wrap up this conference with remarks from a representative of the Minister of Finance of the Republic of Indonesia.
Excellencies, distinguished guests, ladies and gentlemen, before we go further to the first panel session, it is with great honor that I may now introduce to you our guest lecturer, Professor Bambang Brojonegoro. Professor Bambang Brojonegoro from Faculty of Economics and Business, Universitas Indonesia, is one of Indonesia's leading economists, having contributed to his country as Indonesia's Minister of Research and Technology from 2019 to 2021, Minister of National Development Planning from 2016 to 2019, and Minister of Finance from 2014 to 2016. Today, he will be here speaking about how to optimize Islamic finance in post-pandemic era, especially in terms of innovation and digital transformation. Ladies and gentlemen, please welcome Professor Bambang Brojonegoro.
Assalamualaikum warahmatullahi wabarakatuh. Very good morning to all participants, and also good afternoon or good evening for participants outside Indonesia. Honorable speakers, distinguished participants, ladies and gentlemen. First of all, I would like to thank the committee for inviting me to the very important event on the Islamic Finance Conference. And today's topic, I think, is very relevant because we are trying to elaborate the role of Islamic finance post-pandemic. So let me start my presentation by focusing on one aspect of Islamic finance that usually comes second or maybe third after the Islamic banking. If I remember my experience when I was the chair of Indonesian Islamic Economists Association, as well as ministers in finance and planning, and also one of the founder of KNE-KS, I remember that most of discussion is about Islamic banking. But now, let's start talking about the Islamic insurance, given the fact that insurance is not just a financial product. Insurance, I think, is very important also for the stable livelihood of our community. And we know that insurance penetration and insurance acceptance in Indonesia still relatively low compared, of course, to the size of the market and size of Indonesian population. But then, of course, when we are talking about Islamic finance and how to expand Islamic finance, cannot depend only on Islamic banking or also only on the, let's say, sukuk. We need to diversify the products, but the products, of course, has to be useful, and the products have to help the government in creating inclusive economy, especially after the pandemic. And then, of course, at the end of the day, we are talking about the importance of digital transformation when all of financial product needs to digitize their service to the clients or to the customer. What is Sharia insurance? Sharia insurance basically is insurance, like what we know so far, based on Sharia principle with regard to mutual assistance, ta'awuni, and mutual protection, or takaful. I think most of us already know, or at least heard about takaful for a long time. Between the participants through a collection of funds, dana tabaru, managed under Sharia principles to deal with certain risks. So from this definition, there could be similarity between Sharia insurance and mutual. And of course, it's not really similar. I mean, it's not really the same. It's not exactly the same, because mutual is one type of insurance that might not be accommodated in Indonesian regulation, or although the company is still there, but of course the Sharia has different type of mutual that hopefully will be managed well and under the OJK regulation. According to OJK, as of December last year, the total of full-fledged Sharia insurance operated in Indonesia are 13. So it's 13. It means that 13, of course, is very small number. Again, given the size of the market, not only insurance market, but more specifically the Sharia insurance market, meaning that Sharia insurance itself doesn't have strong penetration today. So around the 13, among the 13, life Sharia insurance is about 7, general 1, 5, and only 1 Sharia reinsurance. And then in terms of the market, of course, there is an increase in the market by 1.21% from 3.32 in September 2019, increased to 5.53% in 2020. So it's quite surprising, given the fact that in 2020, we know that most of the time we are dealing with the pandemic, but there was an increase in the market share of Sharia insurance. But of course, the reason why we have to discuss about Sharia insurance is not only about the insurance itself, but the insurance as a source of asset management. And of course, we know that together with pension fund and any other long-term fund, insurance is one of the good source to do investment, especially in the Sharia instrument like sukuk or mutual fund and any other type of financing according to the Sharia principle. So if we move to the next page, we can elaborate about the opportunity and challenges in Sharia industry in Indonesia. Of course, from the demand perspective, there is no question, there is no doubt that Indonesia is one of the very potential market for the growth in Sharia finance. Not only about the total population, especially total Muslim population, but more importantly, we are experiencing demographic bonus, meaning that we have young population and those millennials with the estimated amount 50 to 60 million people realize the importance of Sharia investment. So it means that in this group, the awareness and of course willingness to deal with Sharia instrument is increasing. And then if we look at the one of the survey done by Karim Consulting in 2021, there is an increase in demand in 10 big cities in Indonesia. 73% of the people in the survey interested on having Sharia insurance. So first of all, there is an increase of the awareness of the insurance, and secondly, on Sharia insurance. So I think these two conclusions are very important for Indonesian financial development. And then in the next 3 years, according to another survey, the potential of Sharia life insurance predicted to increase to around 10 trillion rupiah. 81%, of course, coming from the Muslim population, and 90% coming, from non-Muslim. So it's good to see that the awareness of life insurance and the willingness to use Sharia instrument are increasing. And we know, for example, during the pandemic, I think we understand the importance of the life insurance in general, Sharia and non-Sharia. Why? Because, during the pandemic, there were a lot of casualties, fatalities that could affect, the life of the family, the life of household. So the existence of the life insurance could help to mitigate the worst impact of the pandemic to the family and also to the household. And on the other side, especially on the supply side, Sharia industry now gets domino effect from the other Sharia services. Indonesia now has public housing savings called Tapera. And of course, we have the BPJS Ketenagakerjaan or Jam Sostek, as well as we just witnessed finally the merge of Islamic banks from state-owned enterprise. With those institutions, then, and of course, we are talking about Bank Syariah, which now becomes the biggest Syariah banks in Indonesia. And we also talk about the Syariah part of Jam Sostek and Tapera that will basically increase the portfolio of Syariah in Indonesia. And on the other end, because we are in the digital transformation era, the Sharia finance is not left behind. Sharia finance trying to get into digitalization by selling more efficient and effective product to the market. So the role of digitalization is important not only, for better services, but more importantly for better marketing. And of course, at the end, we are talking about the efficiency that will help in terms of the bottom line of any Sharia financial institution. And of course, when we come back to the role of the Sharia insurance, as I mentioned earlier, then Sukuk will have more potential financing or investment from the existence of Sharia insurance. And also, at the end of the day, the government project, for example, asset-backed Sukuk in terms of government project, now is supported directly and indirectly by the Sharia financial instrument, either through bank or through insurance. And again, insurance together with pension fund are the major sources of long-term funding. So if we move to the next page, if you look at the Sharia finance market in Indonesia, we can see that by December 2020, so just around 8 months ago, the total asset of Sharia finance around more than 1,800 trillion, in which 90% basically coming, of course, in terms of, comparison to the conventional finance, is still relatively low. Altogether, bank and non-bank capital market is around almost 10%. So 10% of Indonesian financial system is based on Sharia. 90%, of course, still conventional. But of course, 10%, given the size of the Indonesian market, I think is still quite a significant number. And of course, we know that banking, Sharia banking, is still dominating. But of course, we would like to see the growth or the development of other type of Sharia financial instrument like insurance and also capital market. And if you look capital market, we can see that there are still a lot of potential for sukuk, especially corporate sukuk. Of course, when we are talking about government sukuk in rupiah or in US dollar, I think government has been quite active, and in fact, in Indonesia, in terms of government sukuk, Indonesia is one of the biggest. But then when we are talking about other type of the Sharia product, like a corporate sukuk, as well as mutual fund or reksadana, I think we are still behind, meaning that if you want to diversify our instrument, then those two needs to be developed. And if these two, corporate sukuk and mutual fund, Sharia mutual fund, could be expanded, then it will help the development or the growth of the Sharia insurance, because then they will have bigger or more diversified, portfolio to do the investment. Of course, we are talking about the long-term investment. And quite surprisingly, in 2020, we are talking about the banking now, Sharia banking performance showed positive growth in the middle of the pandemic. And the market share increased to 6.48%. Of course, I know it has been helped by some of the conversion from full conventional bank to the full Sharia bank, especially in some regional bank. But at least there has been some progress, there has been some growth that will help the development or the growth of Sharia financial situation. And then if we look at the total asset in general on the next page, the total asset we are talking now about the IKNB, which is the non-bank Sharia financial industry. The total asset, of course, compared to the banking sector, is still relatively low, 113 trillion rupiah, with the market share only 4.38%. Of course, the biggest one coming from the Sharia insurance, and then Sharia credit guarantee, as well as Sharia financing institution. We are talking about the Sharia aspect outside the banking and capital market. And as I mentioned earlier, Sharia insurance, there are 13 of them, 13 units dealing with Sharia insurance, with a total asset 43 trillion, Sharia pension fund only 7 trillion, Sharia funding in terms of Sharia financing and venture capital, 22.85 trillion. I would like to talk a little bit about Sharia venture capital. I think in the era in which we are trying to promote entrepreneurship, we are trying to promote startup, tech-based or technology-based entrepreneurship, then the role of venture capital is important. And we would like to see more contribution from Sharia venture capital to support the startup. Startup, it could be startup, Sharia-based startup, like in the fintech, for example. So if you would like to see maybe more fintech in Sharia fintech, then hopefully the Sharia venture capital could be behind that, as of course the investment as the one that supporting the investment of the company itself. And then in terms of credit guarantee, I think it's quite big, number two, to insurance, almost 40 trillion rupiah. And fintech, as I mentioned, now it's very small, 59 billion rupiah. It means that if we would like to, develop the digital transformation of Sharia finance, we need to increase significantly the Sharia fintech. Together, of course, with Sharia Bank, Sharia Insurance. Why? Because this fintech Sharia will accelerate the digital transformation inside the Sharia financial business itself. So, if we move to the effect of COVID-19 on global insurance industry, now we are going back to the insurance topic. On average, of course, the global insurance industry is very much affected by the COVID-19, negatively affected. And the loss of global insurance industry is around 35% from the market capitalization after the pandemic hit. So it happens everywhere in the world, including in Indonesia. And then the most specific impact on Indonesia can be seen on the next page, in which Sharia in general, Sharia insurance industry surprisingly record growth contribution in 2020 in the middle of pandemic. But on the other side, other indicators such as asset investment occurred at deceleration. And we know why, because one of them, we experienced some rapid decline or some kind of shock in our capital market. Of course, it is expected shock because of the pandemic. But of course, the shock in the capital market will affect the asset management or investment from insurance companies. However, if we look at the performance of insurance companies, they are doing relatively better because their market share increased and the total asset, of course, experience growth. And I think it's good start for Sharia insurance to develop even further in the future. What are the challenges facing by the Sharia insurance during COVID-19 pandemic? Of course, there could be increase in claim, and that's one side on the terms of the amount. But on the other side, there are some difficulties because of the lockdown, partial lockdown, PPKM, PSBB, and everything else that makes the claim maybe disrupted. I mean, the claim operation might not be smooth because of those kind of restriction. And also issues related to pricing, underwriting, because, the pandemic gives some kind of uncertainty. We know, for example, how to estimate the pricing of health insurance, for example. But then with this pandemic, maybe we are lost because this kind of pandemic gives us no clue how to deal with the disease itself. So it might affect the pricing or underwriting. And then customer support, of course, will be disrupted. And then the impact would be loss in estimation, actual reserving, because then, we have not clear indication about what will happen in the near future. We are not talking about what will happen in the next 5 or 10 years. We are not even certain about what will happen in the next 1, 3, 5 months, or even a year. For example, maybe most of us, we ask ourselves, we hope at that time when we were still in the mid of 2020, we hope that by mid of 2021, this year, the pandemic is over. But today, we are still in the middle of pandemic, and even we just maybe a little bit released from strong PPKM that just imposed by the government. And then, of course, there will be disruption on marketing. For example, the agents, insurance agents, cannot just, meet, face-to-face with potential customers. They can do it only by online or by telephone communication, which might be different different experience compared to the face-to-face meeting. And there could be also some issues related with the legal. And if we look at what insurance industry or non-bank financial industry has been doing against COVID-19 on the next page, of course, we have to do counter-cyclical policy. And OJK already done that with OJK regulation number 14, in which on financial industry, for example, a simplest one, fit and proper test is not disrupted because still they can do it through video conference. And then in terms of for financial institution, they can do restructuring in terms of asset quality as well as funding. On pension fund, there is a kind of recalculation of pension fund program and implementation of life cycle fund for the pension fund. And then, of course, calculation of solvency rate on the insurance, including Sharia. So this implementation, of course, need to pay attention on principal carefulness, management risk, and good corporate governance. Of course, we cannot sacrifice those things simply because we are doing the counter-cyclical policy. And then for non-banking financial institutions that adopted Sharia, the counter-cyclical policy has to be based on Sharia principle. So it means there is no compromise regarding the basic principle of managing the company as well as the basic Sharia principle for Sharia financial institution, including insurance. So what kind of mitigation impact of COVID-19 from non-bank financial services, including, of course, the Sharia insurance? As I mentioned already, there is counter-cyclical policy by OJK regulation, and also, of course, maybe most of the insurance companies, including Sharia insurance, has to adjust premium calculation or loss estimation. And of course, more importantly, to help the customers, giving discretion on the delay of premium payment. And I think this is important that the insurance pays more attention to the needs of the customers. And one of them maybe by adjusting the rate, or the other one is by, giving more time or time relaxation for paying the premium. In the near future, of course, we have to strengthen internal policy that focus on solvency, solvability, and cash flow. I think it would happen to any financial institution after the pandemic. Because the pandemic, of course, there are a lot of relaxation, adjustment, and discretion. But after that, of course, we have to stabilize the companies by doing that. And then, more importantly, which is the topic of today's discussion, strengthening the digital system. It is a must, not just happen because of the pandemic, but it has to be the mainstream of financial industry, including the insurance. We might be, comfortable already with the digital banking, and in fact, there were now some digital banking operating, but in the insurance, of course, we don't have to make the digital insurance company yet, but at least the way insurance operates, including Sharia insurance, has to be based on the digital technology. And digital has to be mainstream of any Sharia insurance operation now and the future. And of course, at the end, I would like to give some recommendation or advice for development of Sharia insurance in the future. Again, to diversify and, of course, to accelerate the Sharia financial growth by strengthening the insurance, not just bank, but insurance and other types, including the capital market. First, of course, public education, because, customer needs to be educated. First, education about the importance of insurance, how to change the mindset. Insurance is a need rather than a want. So far, in my opinion, most of the customers still think insurance is something that they want, not something they need. As a result, the penetration of insurance is relatively low, including, of course, the Sharia insurance. So the literacy and public education needs to be increased. And the way we have to do it has to be through digital approach, not just through some academic approach or just through some like newspapers or television or electronic media, but now it has to go through pop culture media. We are talking about the importance of social media. And then we have to increase the reinsurance. Of course, we know very well the existence or the strength of the insurance industry depends on the existence of reinsurance company. So far, we only have one Sharia reinsurance, and we need more. But of course, on the other side, we need to increase the penetration of Sharia insurance for the people in general. And then, this is the very important topic of today, advancing digitalization on Sharia insurance product. Of course, product development is very important. I think the more variety of product development is very important to deal with the crisis, to deal with the pandemic. But post-pandemic, of course, we still have to keep the product development and especially could provide, let's say, more affordable premium for the customers. Of course, Indonesia now in the middle income country, around $4,000 per capita. And of course, the rate of premium should reflect this $4,000 per capita, meaning we have to make insurance, especially Sharia insurance, more affordable to the people. Once the people realize the insurance, including Sharia insurance, is a need rather than a want. And then after that, of course, after product development, we have to make sure all product development needs to be digitized or has to be available also in the digital version. And that will accelerate the digital transformation in general and especially in the financial sector. And of course, we have to implement the digital application in order to be competitive. I think more and more financial institutions trying to go digital, especially in the banks. And it will be also in insurance, and Sharia insurance cannot be behind. They have to be one of the forefront of the digitalization of insurance. What kind of digitalization? Digital application to open Sharia insurance policy, how to do the marketing as well as, how to apply for the insurance online. And then Sharia insurance teleconsultation, which is very important. I remember usually in the past, whenever we had question about insurance, we have sometimes no clue to whom we should ask that kind of question. If we ask agent, sometimes agent said, "Oh, I don't know very well about the company's policy." When we try to reach the company, it's hard to reach the company itself. The telephone is always busy, the line is always busy, and then if we go to the office, sometimes we have long queue, long line. So then we simply give up. So the digitalization will help with this teleconsultation. And of course, now we can use the artificial intelligence to check, for example, the know your customer, in a better shape, as well as using artificial intelligence, let's say, to investigate or to analyze whether a claim is a claim or not, is a real claim or not. Does the claim have justification? Does the claim have the base? In the past, we have to deploy people to do that. But I think in the near future, we can use the artificial intelligence to substitute or to complement what human being can be doing regarding the insurance, including Sharia insurance. And of course, with the innovation, we can create many other digital services that will help not only giving service to people, but more importantly, how to make Sharia insurance in Indonesia more competitive. So it's not just product development, but product development followed by the digital transformation of the company itself or the product itself. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Professor Bambang Brojonegoro, for the lecture. Now, Excellencies, distinguished guests, ladies and gentlemen, for the moment we all have been waiting for, that is the announcement for the call for paper winner. I would like to invite Ibu Rahmatina Awaliyah Kasri from Universitas Indonesia. Ya, Ibu Rahma, the screen is yours.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Assalamualaikum warahmatullahi wabarakatuh. A very good morning to all of us. Excellencies, distinguished guests, ladies and gentlemen. First of all, I would like to thank you, the Fiscal Policy Office of the Ministry of Finance, for organizing the 5th Annual Islamic Finance Conference call for paper. I would also like to thank you, the academic committees from Indonesia and abroad, for their valuable contributions in the call for paper and during the review process. The participants of the call for paper and also their respective institutions for their hard work in doing the research and participations in the conference. And also other parties supporting this important event, Prof. Bambang Brojonegoro, who gave us opening keynote speech this morning, EIE, MES, IDB, and also other supporting parties. On behalf of the academic committee, I would like to report that we received very good response for the call for paper. The academic committee received more than 200 abstracts for the call for paper, the highest in the history of Annual Islamic Finance Conference so far. The works come not only from academics in Indonesia and abroad, but also from practitioners and regulators. After conducting 2 rounds of thorough review process, 12 best papers were selected and asked to present their work yesterday. The judging process was not easy and quite challenging because all the papers were very good, both in terms of topic and also quality and prospects to be published in international journals. Despite this, the academic committee must still choose the 3 best papers. The best papers will be guided to publish their papers in international and reputable academic journal and receive token of appreciation from Universitas Indonesia. And today, on behalf of the academic committee, I'm very proud to announce the 3 best papers. They are, these are the winner for the call for paper, the 5th Annual Islamic Finance Conference. This is alphabetically written. Aimatul Yumna, Joan Marta, and Ramel Yanuarta from Universitas Negeri Padang, with the paper titled The Role of Wakaf for Sustaining Welfare and Increased Financial Inclusion During COVID-19 Pandemic. Second, Dendi Indramawan, Rismanto Irawan for their paper, COVID-19 and Stability of Islamic Rural Banks in Indonesia. And last but not least, Muhammad Rizki and Doni Abdul Khalid from Universitas Indonesia, the analysis of herding behavior impact on volatility, comparative study of conventional and Islamic indices in Indonesian stock market on 2013-2021. Congratulations once again for your achievement. We wish you all the best in in the next process of publication and also in your future career. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Bu Rahma, for announcing the winners. And once again, congratulations to all the winners and thank you to all participants of the call for paper of the 5th AIFC. We hope all of the ideas proposed and presented can contribute to the improvement of policy formulation of the related issues in Islamic economy and finance. Excellencies, distinguished guests, ladies and gentlemen, we will begin our second panel session today on Islamic finance development, enhancing resilience and stability in pandemic and post-pandemic era. This session will be led by a chair discussion, Bapak Dadang Mulyawan. Bapak Dadang Mulyawan is a director at the Central Bank of Indonesia, as well as a member of the Board of Trustee of the Islamic Development Bank Institute and a member of the Advising Committee of the National Good Governance Committee. Bapak Dadang, good morning, Pak.
Good morning. Assalamualaikum.
Waalaikumsalam, Pak. Before I hand it over to you, Pak, I would also like to invite all the panelists to join in a photo session together. First, please welcome Professor Mansor Ibrahim, Deputy President and Dean of School of Graduate Studies in International Center for Education in Islamic Finance. And then second, we have Dr. Bello Lawal Danbata, Secretary General of Islamic Financial Standard Board. And next is Ibu Nyimas Rohmah, Director of the Directorate of Regulation of Licensing of Islamic Banking, Financial Services Authority. And then we also have Professor Kabir Hassan, Professor of Finance, University of New Orleans, USA. Yeah. I would like to ask all the panelists and moderator to please turn on the camera. Yeah. So I'm gonna count down to 3, 2, 1. Yeah, thank you very much to all the panelists and moderator. Now, Bapak Dadang, I trust you will introduce your panel and the screen and the microphone are yours to lead.
Okay. Thank you very much. Yang terhormat Bapak Bambang Brojonegoro, ladies and gentlemen, today we will have a very important session which has topic of Islamic finance development, enhancing resilience and stability in pandemic and post-pandemic era. So in the next 90 minutes, we will have 4 panelists, a very prominent speaker, and also question and answers. Before, I'd like to introduce about the topic. The prolonged COVID-19 pandemic, to my opinion, has served as super changer in many aspects of living, which does not discriminate between developed and developing countries, Islamic and mainstream financial system. In one aspect, this pandemic era has been an enforcing factor for digitalization process, despite tremendous pressure for certain economic sectors, such as tourism, transportation industries, and etc. The challenge in managing social disparity has also been intense, along with higher unemployment rates, and as the result of business closures. The strategy formulations, which has to be proper in managing in this period and the aftermath, is extremely crucial, whether a country after the pandemic period may head into a newly higher efficient system, or otherwise plunge into a problematic situations. Today, we are fortunate to have 4 prominent speakers in this Islamic financial industry who will share their insightful presentations coming from regulators, international standard setters, and also global researchers. Number 1 is Ibu Nyimas Rohmah. She's a director of the OJK, She will share about the Indonesian strategy, not only to survive these challenges, but to further excel by intensifying by further collaborations and also innovations. We have also Professor Mansur of the INCF that would like to share his view how this period served as a test for Islamic financial industry. The third, we are also fortunate to have Dr. Bello, a representative from the international standard setters, that will share his view on how the standards of the Islamic financial industry has to be kept harmonized, not only among the member country, but also with other international standard setters and other global initiatives. And lastly, we will have also Professor Kabir Hasan that would like to share his view on how Islamic finance industry should do or already has done structural reform by doing consolidation and policy enhancement. I would like to also inform that Ibu Nyimas and Professor Mansur have to leave the program right after their presentations. But however, we would like to thank you for sparing your precious time with us. Then we start with speaker number one, Ibu Nyimas Rohmah. She graduated from Institut Pertanian Bogor, Fakultas Pertanian, and also she holds a master degree, Master of Science in Finance from International Islamic University, Malaysia. Without further ado, Bu Nyimas, the slide is yours.
Thank you very much, Dr. Dagda Mujawan. Is my voice clear enough to be heard?
Yeah, loud and clear.
Thank you. Bismillahirrahmanirrahim. Distinguished speakers, Professor Mansur Ibrahim, it's nice to meet you again. I'm one of your students back in 2004 in the Master of Finance program in IIUM. And then Dr. Bello and Prof. Kabir Hasan. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi.
It's really a great honor for me to be here. Thank you very much for the opportunity to present the Islamic finance development, opportunities and challenges in the pandemic and post-pandemic era. Can I have my slide, please, on the screen? Okay, thank you. So my presentation today will be in 3 parts. Next slide, please. Next slide, please. Okay, the first part, I will provide a snapshot on the development of Islamic finance in Indonesia and how it's conditioned during the pandemic. The second will be our view on the challenges and opportunities in developing Islamic finance in Indonesia. And the last one, I will share our national policy response to specifically for Islamic finance to contribute in accelerating national economic recovery. As you can see from the screen, that as of May 2021, total Islamic finance assets in Indonesia have reached 1.8 trillion rupiah, or approximately 125.2 billion US dollar. Large proportion of Islamic finance in Indonesia comes from Islamic capital market with 74.3 billion US dollar, or 59% of total Islamic finance assets, followed by Islamic banking assets with 43 billion US dollar, or 34%, and Islamic non-banking financial assets with 8.1 billion US dollar, or 6.5% of total Islamic finance assets. After experiencing slowdown last year due to pandemic effect and uncertain global condition, the Islamic financial industry in 2021 recorded encouraging growth with 22.45% year-on-year asset growth in May 2021. Market share of Islamic finance also have reached 9.57% of total financial industry in Indonesia, and the number keeps increasing. Considering Indonesia has large Muslim population and increasing government support to develop Islamic finance industry is expected to grow continuously in the following years. As I have mentioned before, Islamic banking assets have reached 613 trillion rupiah, or 43 billion US dollar in May 2021. Similar case with Islamic finance. The Islamic banking industry in 2021 also showed signs of recovery, with year-on-year growth moving in upward trend. As of May 2021, Islamic banking recorded 15.54% year-on-year in assets growth and 17.52% for deposit growth and 7.32% for financing growth. Islamic banking in Indonesia, which consists of 14 full-fledged Islamic banks, 20 Islamic windows, and 163 Islamic rural banks, currently have market 49% of total national banking industry. As we all aware, COVID-19 pandemic is affecting all aspects of global economy, with no exception to Islamic finance industry. In addition to the COVID-19 pandemic, there are other challenges that must be faced by Islamic banking in order to grow optimally, including the first one is limited differentiation of business models or products to meet the needs of the community. Islamic banks should have variety of product customized by customer segment and life cycles. Otherwise, customers will abandon Islamic banks if they cannot fulfill customers' needs. Thus, besides having Sharia compliance products, industry players also must develop innovative and creative products that are unique and would attract public attention to use the products as their prominent choice. This should also be supported by advanced IT development that could handle variety of product scheme and reporting in accordance to Sharia principles. Second is limited capacity of Islamic finance in terms of total assets and market share compared to conventional finance. Although currently there are many Islamic financial institutions, there are not many large-scale Islamic financial institutions in Indonesia. For example, in Islamic banking sector, there are no Islamic banks belonging to the Buku 4 group, with a minimum capital of 30 trillion rupiah. Third is low literacy level for Islamic finance. Based on the 2019 National Financial Literacy Survey, the literacy level for Islamic finance is only 8.93%, even though this figure is increasing from the 2016 survey, which is 8.10%. However, it's still far compared to the literacy level for conventional finance, which has reached 37.72%. Therefore, a great effort is needed to all stakeholders to increase literacy in Islamic finance. Fourth is lack of competent human resources. Market player in Islamic finance industry should not only competent in financial aspect, but also in fiqh muamalah as well. Fostering competent human resources, Islamic finance would start from educational institutions such as schools and universities. Thus, education personnel like teachers and lecturers which have competency in Islamic finance are also necessary for further developing Islamic finance. Other notable challenges that also need to be addressed by Islamic finance is changes in people's behavior. With how fast technology developing, there is a change in customer behavior that prefers interacting with banks digitally compared to visiting branch offices. This should be used as momentum for Islamic banking in maximizing their services through reliable and digital-based financial services. Despite having an unprecedented challenges this time, and new opportunities also lie for the industry that should be utilized for further develop Islamic finance. First is having large Muslim population. More than 87% of Indonesia's population, or around 230 million people, are Muslim, with more than 28,000 Islamic boarding schools and 800,000 mosques. In addition, there is also a growing middle class and productive age population, where more than 30% of the population is the millennial generation. Second is high internet penetration. Currently, internet users in Indonesia have reached 196 million users, with a 73.3% penetration of the total population in Indonesia. Third is increasing awareness of ethical investing that is in line with basic principles of Islamic banking, as shown in a survey which states that 62% of investors with view environmental and social issues as important. Fourth, which also very important, is that Islamic finance development is aligned with government's goal for Islamic economy. Currently, we have seen various government initiatives to develop Islamic economy and finance in Indonesia, such as attention to the halal industry or initiatives to create large capacity Islamic banks. Currently, in the early of this year, we have seen that 3 Islamic banks in Indonesia is merged and become one of the big banks in Indonesia, which is Bank Syariah Indonesia. Those initiatives should be utilized by Islamic banking. Aligning work program with government strategies for developing Islamic economy could result huge synergy and benefit for Islamic banking. And then what's next? In order to support Islamic economy and finance, playing vital role in global economic recovery, the stakeholders need to cooperate in designing new strategy and policy. OJK have designed several policy measures, which are pandemic response effectiveness, increased demand through supporting the real sector, and strengthening the financial service sector. In this presentation, I will address the OJK policy response for Islamic finance, starting from pandemic response effectiveness, then moving on to recovery and post-pandemic policy response, which are increased demand through supporting the real sector that will be explained further through synergy and interconnectedness within Islamic economy ecosystem.
Mas, unfortunately, you have 2 minutes more, please.
Okay, I'll just try to be fast. Okay, next slide, please. In this slide, we just want to show that the pandemic response effectiveness is because of the COVID-19 pandemic. The Indonesian government has issued Act number 2/2020 regarding financial policy and financial stability in response to COVID-19 pandemic. And to support this act, Ministry of Finance, Bank Indonesia, and OJK work together through synergy and coordination mechanism of Financial System Stability Committee Forum. And following the act, OJK has issued several policy response which apply for whole banking sectors, include Islamic banks. And the most important OJK policy is the credit restructuring policy. The policy response aims not only for banks' condition, but also for debtors affected by COVID-19 pandemic. So we are not expecting debtors who still have good prospect but affected by COVID-19 pandemic to be defaulted. Therefore, these debtors can apply for restructuring program from their banks, and hopefully they could improve their financial condition in the future. And then the next slide. In order to accelerate national economic recovery, the real sector and financial sector should be act together, including the role of Islamic finance. Going forward, the development of Islamic finance will focus on the synergy and integration between Islamic finance, the real sector, and social finance, which included in Islamic economic ecosystem. Next slide. As mentioned before, Islamic finance does not only comprise of commercial aspect, but also social aspect, such as zakat, infak, sedekah, and wakaf. Those Islamic social finance instruments can play a greater role in helping the government to prevent and alleviate poverty, especially during the pandemic. And the next one is another policy measure to utilize Islamic economy and finance for economic recovery is to strengthen the financial services sector through consolidation. OJK encourage Islamic banks to increase their economies of scale by increasing minimum capital and accelerating consolidation. Large-scale Islamic banks will have more advantage on its competitiveness in the national banking industry. And then the last slide is, in this pandemic, there is massive changes in people's behavior that could be seen in data released by Google Mobility Report Indonesia. People are more active at home and tend to reduce activities outside the home. The need for face-to-face financial transaction is also minimized. People considered digital services as health-safe choice. In addition, our data also shows that there is a decrease in the number of Islamic banks offices. In order to survive, there is a need to massive digital adaptation in Islamic finance institutions, including Islamic banks. Moreover, an increasingly borderless world due to digitalization also demand Islamic banking to always develop its technological infrastructure in order to improve its services to customers that demand faster, more comfortable, and better services. That's all my presentation for today. I hope this sharing will benefit us in order to formulate the best strategy for Islamic finance in accelerating our national economy.
Okay.
I apologize if there is any inconvenience. Thank you.
All right. Thank you very much, Bu Nyimas. At least you have presented a very tangible policy response by the Indonesian Financial Authority, at least in 3 areas, by strengthening the macro and micro prudential policy, and then broadening the customer base by doing further collaborations, not only with the customers, but also with the environment, ecosystem of the Islamic economy, not only the financial system. Again, thank you very much, Bu Nyimas. Okay, for the next presenters will be Professor Mansur, that would like to share his view on how this period served as a test for the Islamic financial industry. The screen is yours, Prof. Mansur.
Okay, Bismillahirrahmanirrahim. Thanks, Dr. Dadang, Muljawans, and my fellow speakers, and hopefully all of you can hear me. My fellow speakers, Dr. Nyimas, my former colleagues, Dr. Belu, nice to see you here. And again, my good friends, Prof. Kabir. I think we have been in the same forum for so many times, and Alhamdulillah, again, we are here today together to talk about Islamic finance, right? And my presentations would revolve around Islamic finance and basically inclusive growth, right? And my purpose is not to answer the questions, but my purpose is mainly to put some thoughts in the context of making assessments of Islamic finance in the time of pandemics and in the post-pandemic, whether Islamic finance has really contributed in accordance to its objective or maqasid. So what I would do in my presentations, and hopefully it will be brief in terms of the presentations. The first one, I will go briefly on what I think we should look at when it comes to maqasid with reference to Islamic finance. And then I think something that has been touched before, and I think all of us are aware in terms of the COVID-19, right? But then the COVID-19 is a new phenomenon that have very far-reaching consequences, but then an economy or the global economy have gone through many other adversities before, right? So try to look at the difference that COVID-19 has brought to us as compared to the previous, for example, the global financial crisis. And then I would try to answer based on the research that has been done so far. So more or less try to look at the finding that we have. Has Islamic finance fulfilled its intended objective, and try to look at some evidence. And finally, I will try to conclude to make some suggestions, right? Now, when it comes to maqasids, right, we have to go back to the early years of Islamic finance, when the conception of Islamic finance coming out, right? What are the objectives there? And what are the underlying foundations, right? And normally I define Islamic financial system, right, to comprise of Islamic financial institutions and authorities that dealing with the transference or allocation of funds or wealth in an economy, right? So that's basically Islamic finance, facilitate transactions by allocating the funds from one unit to the other units, right? And if we go back to the early years of Islamic finance, of course, the main foundations, we have to go back to Islamic worldview. And at the times of the discussion at that time, the main thing that has been emphasized is to make Muslims to be free from interest rate, because that has been considered as the root cause of so many different setbacks and adversities that hit many economies. And then the objective of Islamic finance, right, had been always, I would say, two in context of the objective. The first one would be support to the real sector, close connections with the real activities, where Islamic finance should not be, unlike conventional finance, established on its own and survive on its own and separated from the real sector. So that's the first objective that are intended for Islamic finance, free from interest, but then align themselves closely, okay, strongly to the real sector, and with the outcome of what we term as shared prosperity, right, where the wealth of the nations is not, I will not say that should be shared equally, right, but everyone should get the benefits from the expanding wealth as a result of the expansions of the real sector supported by Islamic finance. Right? So those what I see as the objective established for Islamic banking and finance. And of course, we may touch on Maqasid al-Sharia, but those are givens as part of the objective of every individuals that profess to be Muslims. Right? But in the context of Islamic finance, very important are these two. And in making assessments of Islamic finance, we have to come up with, of course, indicators. What does it mean by connection with the real sector? We have to come up with the indicators of shared prosperity. To what extent? What are the minimum requirements, and so on? And our guidance in this should be in the text, in the Quran, as well as in the Sunnah. Because there are a lot of verses, a lot of hadith that have discussed the notions of shared prosperity, that have discussed the meaning of tijara, trading, real sector support, that financing must facilitate. So those are indicators that we have to come up with, right? And if we look at the achievement of this, right, and it's not something new. If we want to trace to Islamic finance, right, the so-called social Islamic financial institutions have existed for a long time in terms of awqaf or zakat, right, before very informal types of zakat institutions, right, informally taking place, but now it's very formal institution that basically manage the zakat fund. The banking systems are just new coming up, and as well as Islamic capital markets, which is simply the classifications of the firms into whether there's Sharia compliance or Sharia non-compliance to facilitate investors so that they can basically channel their funds or their excess funds for the purpose of productive activities to the firms that meet the requirements of what being said as Sharia compliance. And these are basically, I would say, the starting point in terms of looking and assessing the Islamic finance. Look at the objective. And so far, when we look at the discussions of Islamic finance, I would say that we have been unfair to the Islamic financial institutions, to the banks, to the Islamic capital markets, because we want them to solve all problems. But then, to be fair, we have to access them in accordance to the objective of their conceptions, right? Where the foundation Islamic worldview, and the outcome would be they have to support the real sector closely, right, strongly, and they have to result in the outcome that are shared across all segments of society. And in terms of COVID-19, I think I do not have to go far in the context of impacts. right? Because it's far-reaching on all segments, on all sectors, of course, except health-related sector. Right? This sector tend to benefit from COVID-19, but all other sectors are affected badly by the COVID-19, broad-based in terms of the impacts. And we have seen the recessions as a result of COVID-19. And Alhamdulillah, in this quarter number 2, Malaysia has come out with a strong growth, the same as Indonesia. But the recession that we have gone through have thrown many into poverty. The World Bank have estimated that additional 88 to 115 millions has been thrown into extreme poverty in 2020. And it will be as many as 150 million by 2021. And the study that has been done by the IMF, right, in context of income inequality, the impact of the current of the current pandemic on income inequality will be bigger, right, than what we expect from the previous pandemic, or what we have seen from the previous pandemics, or will be bigger than those following recessions or financial crisis. And that the expectation in terms of widening income inequality. And these are economic outcomes. There are more outcomes, more problems coming up in the context of health, in the context of education. And I would say that the adverse socioeconomic impacts, and especially in context of poverty and inequality, will stay longer than we might expect, right? Because households and SMEs, right, post-pandemic, as they try to stand on their feet, right, but they have to face the fact that all of their savings have been exhausted. And of course, in many different countries, there are fiscal stimulus, right, and there are basically financial aid, financial transfer to the poor, but then at the same time, the one that are at the lower end of income have also used up even their retirement fund, right, as in the case of Malaysia. So for them to stand on their feet, for example, it may take longer. And now, if we look in this context, right, we may think, we may in the context of Islamic banking, for example, what are their roles to play in the context of alleviating the difficulties that these households and SMEs will face, right? And if we go by the theory of conventional banking, at the time of adversities, at the time of recessions and uncertainties, normally conventional bank will charge a premium. So there's a premium on the risk that has been priced for the uncertainty. Will Islamic banks do the same? So these are type of things that we have to look at. Now, with respect to this, as I mentioned, has Islamic finance system fulfills its intended objective? And this, for many of you might know, is not something new. And if we go through the scholarly works that have looked at Islamic finance, the debates are still ongoing in the context of the Islamicity of Islamic finance, and the focus has still been on comparative performance. How do Islamic finance performs? Financial institutions perform in comparison to conventional financial institutions. And then more recently, the work start to come out looking at the contributions, the real contributions of Islamic finance. And some have viewed that the COVID-19 provide an opportunity in the same way as the global financial crisis, in the same way as the Asian financial crisis has provided for Islamic finance to demonstrate its difference. Right? And for me, in order to answer this, has Islamic finance system fulfilled its intended objective? The answer will depend on the following questions. Right? Should we assess each provider of Islamic financial services on the same Makassar scales? Right? Provided we have that scale of measurements, because there are various dimensions: the sharing of wealth, the connection with the real sector, for example, reduction in poverty, right? lowering income gaps? Should we assess each provider of Islamic financial services on the same scale? And what should be the main contributions of Islamic finance? For sure, Islamic finance cannot solve everything, but what should be the main contributions? Now, if we look at the evidence that has been done so far, there are positive things that Islamic finance have done, right? And I do not think that at the moment, in my opinions, our resources should be focused on debating on whether Islamic finance is Islamic or even we should pay less attention, try to compare ourselves with conventional finance, right? Because we try to compare two systems that are based on two different principles, right? And that have different opportunity sets in the context of investments or financing opportunities. We should not make comparisons. It's good to make comparisons, but then we have knowns in terms of relative performance based on the research that's been done in the past. Our focus here basically should be based on the contributions that Islamic finance brings. And if the contribution is not up to the objective that is intended, right, the focus again should not abandon Islamic finance and labeling Islamic finance being the same as conventional finance. Right? The research should be focused on how to make it to be a better institution. So that's the direction that I would say in the context of contributing, right, to the role of Islamic finance in fulfilling its intended objective post-COVID-19. And have seen promising evidence coming up in the past when many work that has been done evaluated the performance, the contributions of Islamic finance during the time of adversities, during the time of shocks. I believe, and I know that for sure, Prof. Mir Hassan have so many works in Islamic finance that look at the contributions of Islamic finance. And one of the things that I would like to highlight here.
Still have 5 minutes to go.
Yeah, sure. One of the things that I would like to highlight here in the context of the real sector support, right? Islamic finance has basically demonstrated to be the factor that moderating the impact of the crisis, which means that Islamic finance is less subject to financial accelerator mechanisms or less subject to pro-cyclicality. So this, if we take this as one of the objectives of Islamic financial system, then we should see the positive contributions of Islamic finance or Islamic banking. And also Islamic finance have been shown to contribute to the real sector as compared to the conventional finance where excessive expansion of credit has been the reason for the crisis. I have looked at in one of my work that I have done, the expansions of Islamic financing is not the result of Islamic banking taking more risk, but more as a way of maintain business activities and real activities. So based on this and many others, for example, that have been done on the impact of Islamic finance on financial stability, on financial developments, on growth, on income distributions, if we take a look at the bird's eye view and more aggregate look at the contribution of Islamic finance, I would say that yes, Islamic finance does contribute to inclusive growth. But then we need more from Islamic finance, especially in light of the COVID-19. And based on this, as I mentioned before, right, the debate of Islamic finance that we have so far, I would say, and I make conclusion from what I have read and from what I have researched on, Islamic finance will play for sure a positive role post-COVID. But then I would like to bring you, all of you, to provide a fair view to Islamic financial system, because we cannot evaluate each institution under Islamic financial system under the same yardstick of the Makassar, because different institutions will have different objectives. But if we would like to evaluate whether Islamic finance achieve the shared prosperity, for example, then we have to evaluate in the context as a system, not as and individual institutions within the system. And that what is important. The notion of one size does not fit all is also true in this context. Right? And I would like to emphasize again in the context of the contributions, our focus should make Islamic finance to work better. And we should focus less on comparing with others. And in the same way, we should not be too reactive to the initiative that have taken place in the conventional spheres. Right? Our guideline is clear within the text of the Quran and Sunnah, where we can draw the maqasids of the objective of Islamic finance from there, and we can develop our own indicators rather than using, for example, that we are normally use SDG. Nothing wrong with the 17 goals of SDG, but then our basis must be clear. Our basis is not SDG. SDG just align with our principles, but our basis is not SDG, but the maqasid as embedded in the Holy Quran and the Hadith of the Prophet Sallallahu Alaihi Wasallam. And hopefully, that with the initiative that has been done in Indonesia, a lot of initiatives have been done, as well as in Malaysia, we will see Islamic finance to play a bigger role. We will see Islamic finance will be an institution that will promote what I term as shared prosperity. Again, thanks to all of you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullah. Thank you, Prof. Mansur. Your presentations about the empirical evidence is very really enlightening, and also please us that it shows how the Islamic finance has been less pro-cyclical and also more contributive to the real sectors. Thank you again. For the next presenters will be Dr. Bello. Dr. Bello again will present about the roles of the IFSB, or International Standard Setters, and how it tries to keep the harmony amongst the member country as well as the other international standard setters and also global initiatives. Dr. Bello, the screen is yours, please.
All right. Bismillahirrahmanirrahim. Wassalatu wassalamu ala sayyidina Muhammadin wa ala alihi wa sahbihi wasallim. My colleagues, distinguished panelists, the organizers, the participants, assalamu alaikum wa rahmatullahi ta'ala wa barakatuh, and a very good morning to all of you. First of all, I would like to express the IFSB's sincere appreciation to the organizers for this invitation to participate in this important conference, which is really, really needed and very, very timely. I would like to also recognize the presence of my ex-colleague, Dr. Prof. Mansur Ibrahim, and a good friend, Prof. Kabir Hassan, and Niamas, our partner and a member of the IFSB who we have been engaging. So thank you very much once again for your time, and then to the participants, and then for being with us today. First of all, the role of the Islamic finance in promoting economic recovery is a very important title for this particular conference. But in terms of the Islamic setting bodies, we are looking at the role and the challenges that the Islamic standard setting bodies are facing in strengthening their standards as well as principles. Now, the role that the standard setting bodies will be playing is a complementary role. Each standard setting body has a different role to play. We focus on different segments. As you know, we have the conventional standard setting bodies and we have the Islamic standard setting bodies. In the conventional space, we have the Basel Committee on Banking Supervision for the banking sector. And we have the ISCO, the International Organization of Securities Commissions, which is focusing more on capital market. And we have the IIS focusing on insurance as well as the IDI, which is focused on deposit insurance. In the Islamic financial service industry space, we have the IFSB, the Islamic Financial Services Board, and then we have the IOP. So each standard setting body and IFM as well. So each standard setting body focus on different segments, and then they serve as specific issues within a segment. While the IFSB is focusing on prudential regulation, IOP is focusing more on Sharia, accounting, auditing, as well as maybe governance standards. And then the IFF in the Islamic standard setting body space is focusing more on the documentation. And the essence of all this setting of these standard setting bodies is to support conventional or Islamic finance. For the Islamic finance, definitely the Islamic standard setting bodies are ensuring that there is a stability and for the Islamic financial service industry globally. Now, it's a complementary role, the role that the Islamic financial standard setting bodies have, and largely is more looking into the ability of the standards to be used by our member jurisdictions globally to promote financial stability. Having said that, the role that the Islamic standard setting bodies usually or particularly or specifically focus on is more on to ensure that the standards and the principles that are being promoted by the regulatory and supervisory authorities are actually in line with Sharia, because the essence of Islamic finance is all about Sharia. Maybe perhaps if you can maybe go and follow my words and then go through the slides, that will be helpful to the participants so that they can follow through what I'm saying. Perhaps the essence is to ensure that there is a Sharia compliant. So we set up the standards. The standards are meant to ensure that all the transactions, the way they are reported is transparent in accordance with Sharia. The way the transactions are being conducted in compliance with Sharia, and such that the Sharia non-compliance risks will be mitigated and managed. So please, can you go to the next two slides, perhaps? Now, not this one. I have maybe perhaps you go to the next slide. Yes. Now, the essence of the this Sharia ensuring the Sharia to ensure that there is a credibility and then there is a trust of the stakeholders, that's the customers or those that choose Islamic finance can now be very, very confident that the services that are being provided are as it is, that they are Sharia compliant, not just because they are just packaged and labeled as Sharia compliant or because an institution called itself an Islamic bank or an Islamic funds management organization. We believe once we have this being as an expected outcome, it will definitely facilitate the growth of the Islamic financial services industry globally. And that's the whole intent. So first, you need to ensure stability through ensuring Sharia compliance, and then we provide a credibility of the transaction, credibility to the institutions, and then we ensure that the investors as well as the customers maintain confidence that the Islamic financial services industry is truly Sharia compliant. And this is the main role of the standard setting body. So in that way that the Islamic financial services industry will achieve an increasing growth. But to achieve this, I think the previous two speakers has highlighted quite a number of important challenges and hurdles, which are being handled by either the national regulatory authorities or the financial institutions themselves or by the governments. Particularly related to the capacity building, the level of awareness, and ensuring that the product and services are actually in line with Sharia. And then the financial institutions can be able to promote project, not just, their products and services, not just because of the name, but rather from the economic value perspective, that the customers can see that, yes, it is Sharia compliant and it has an economic value to add compared to the conventional products. Go to the next slide, please. Now, with this background on the main role for the the standard setting bodies, particularly the Islamic standard setting bodies. We faced the pandemic since last year, and that's come up with a new challenge, and that's a new crisis, extraordinary crisis. And then a lot has been presented today and discussed with regard to the pandemic. But what is certain is that the perspective that I'm looking at it from the as a standard setting body is that it accelerates the digitalization, the digital transformation, which we call the fourth industrial revolution, has been accelerated. And then there is a need for the standard setting body to ensure that standards being strengthened by providing necessary guidance to ensure that whatever digitalization is being embraced as an accelerator to provide the services, then it is actually in line with Sharia. And we believe that the digitalization and the COVID-19, as a result of COVID-19, actually brought about a new opportunity for growth for the Islamic financial service industry. And then particularly with regard to the financial inclusion, as a major impact will be more on potentials of financial inclusion or financial inclusiveness. Those that are not unbanked, or those that are not banked, or the unbankables, now they have the opportunity to be part of the financial system in the mainstream. Next slide, please. So, and that's the digitalization added additional responsibility to the standard setting bodies. We have to work hard to with our members, particularly in the standard setting bodies has to work closely with the regulatory and supervisory authorities, as well as market players, to ensure that this brought about the opportunity, as I mentioned earlier, that will drive growth for the Islamic financial service industry, particularly with regard to the financial inclusiveness. And that's brought about the issue of the increased importance of, with regard to the emergence of Islamic social finance. The Islamic social finance has been there. A number of institutions has been making some effort, but we believe the accelerated digitalization as a result of COVID-19 will also accelerate the adoption and the promotion of Islamic social finance. We have seen quite a number of Aifc member jurisdictions in this regard, and they have done quite a lot, and we commend. Indonesia is one of those jurisdictions that has done well with regard to the incorporation of Islamic social finance since the emergence of the pandemic. And we believe that the pandemic has pushed down a large number of population below the poverty line, as highlighted by Prof. Mansur. This is in line with the World Bank report. And then actually the figures may be higher than that, but we believe that as the pandemic is still going on, and then the war for vaccine is still also a struggle one. So the race, for vaccine is still a struggling one, because the developing economies are actually at a slower pace compared to the developed nations. But for the Islamic financial service industry is much more in the OIC member jurisdictions, whereby majority of the population in terms of poverty are there. So definitely there is a need to have some rethink on the way the Islamic financial service industry will be able to address and manage the pandemic effects. And that's where the standard setting bodies has to play an important, bigger role in ensuring that the Islamic financial institutions, as well as the regulators, are actually providing the necessary response that is needed. So Islamic setting bodies, they have to promote the awareness as well as knowledge about the role and potential of Islamic social finance as one of the important tools for promoting and managing the effect of the pandemic and to accelerate economic recovery. Next slide, please. Now, all the Islamic standard setting bodies, the IISSB's immediate response since the emergence of the pandemic and the resulting accelerated digitalization, the work from home that increased the potential risks of cybersecurity risks among the institutions, as well as the the global industry. Now, we need to ensure that the standard remain applicable across different jurisdictions. So that's one of our first response. So what was feasible before the pandemic might call for a different approach during and after the pandemic. And in this regard, we appreciated the prompt policy responses by regulatory and supervisory authorities. Quite a number of responses has been initiated. We have seen what OJK has shared today, particularly with regard to the debt restructuring, as well as the capital injection and initiatives. So these are all things that were not permitted before, and then we have to ensure that the regulatory and supervisory authorities allow some flexibility, but with a caveat to ensure that yes, such flexibility is being planned well and it can be exited without any additional shock to the industry. Definitely the standard setting bodies will have to facilitate with jurisdictions that may find it difficult to implement certain standards, especially during the pandemic. We have issued quite a number of standards that are very, very relevant to address financial crisis, but this is an extraordinary crisis. So we have to be providing a kind of platform for sharing knowledge and experiences among the member jurisdictions through maybe organization of forums and activities. And then we have to ensure that we issue some specific guidance note or statements to advise the member jurisdictions with regard to certain ways that they can be able to mitigate the impact of the pandemic. Of course, we have to address the emerging new challenges and vulnerabilities that are unexpected, that may result in unexpected consequences due to the implementation of policy supports that I highlighted earlier. So we have to facilitate certain kind of discussion amongst standard setting bodies, regulators, and market players to ensure that there are practical exit solutions to some of this relaxation of these policies. And then we may have to issue additional new standards or guidance or public statements that will support. Next slide, please. Now, what role is the IFSB play, or these specific roles that the IFSB play? For the benefit of the audience and those that are not familiar with the work of the IFSB, we are an international standard setting body that promotes and enhances the soundness and stability of the global Islamic financial services industry by issuing global prudential standards and guiding principles for the industry, as well as facilitate the implementation of these standards. The IFSB was established way back in 2002, and we commenced operation in 2003. And as of today, I'm talking to you, the IFSB have about 188 members from 57 jurisdictions that comprise of about 81 regulatory and supervisory mainly central banks, financial services authorities, Securities Commission, and other regulatory agencies. And the role of the IFSB, unlike the BCBS that I mentioned and others, is we look at the three sectors: the Islamic banking, the Islamic capital market, and takaful. So we issue prudential standards that promotes stability and soundness in these three sectors. And we, of course, with the emergence of the pandemic, with the challenges that we have, the accelerated digital transformation, which we call the fourth industrial revolution, we have to facilitate the members to, this digital transformation. We incorporated the issue of conducting businesses through a digital channels in a number of recent standards that we have. And in fact, this was done even before the pandemic. There are some standards that we have issued, majority were issued even before the pandemic comes. And we look at, because since the emergence of fintech, regtech, and suptech, that shows that there is a future potential for financial technology. And that was when we issued some of these standards. We come up with some of these standards, particularly one of those standards is IFSB 25, which is a standard on disclosure to promote transparency and market discipline for the takaful and re-takaful undertakings. That is to support the takaful sector, in which we articulated a number of structures of insurtech that can be utilized. We also issue other standards. The next slide, please. We issue other standards that were very, very useful as well in terms of the Islamic capital market. We have issued a guiding principles on investor protection in Islamic capital market, in which digital transformation is also been addressed. We try to provide some guidance to ensure that for the regulators to ensure that the financial service industry is well protected against any shock related to the application of technology in the capital market. We also have the technical note on financial inclusion and Islamic finance, in which we highlighted fintech, and then as collective investment schemes and social finance that will help the regulators to be able to, provide some regulatory framework and guidance that will stabilize the financial service industry. Next slide, please. Now, in addition to that, the IFSB...
we have 2 minutes more, please.
All right, thank you, Dr. We have been conducting a number of research on the industry-related issues. We have conducted a number of workshops. We provided policy advice and technical assistance to support the implementation of the IFSB standard. We do make our e-learning platform free because we have an e-learning platform that we support our members. We do conduct roundtables and seminars and conferences with the industry stakeholders. And then specifically for the COVID-19 response, we have a compendium of policy responses, and we issue a public statements to provide appropriate policy guidance. And we launched the IFSB CEOs Forum since last year, where we invite the CEOs of Islamic financial institutions to come and discuss some of these challenges that they are facing and how they can be able to overcome. And for wider coverage, we have actually been now translating the IFSB standard into 3 languages in addition to English. We have been right from day one translating the IFSB standard into Arabic, and now subsequently French and Russian. And all the standards are free and available, can be downloaded from the IFSB website. Next slide, please. Now, of course, one of the IFSB's important publication is the flagship publication is the IFSB Stability Report. We just launched the 2021 Stability Report, and you can be able to download it for free from our website, and then you'll be able to see the trend of growth and as well as the impact of the COVID-19 and the responses by many jurisdictions from our website if you download the report. Next slide, please. Now, with regard to how we come up with that report, we actually have the Prudential and Structural Islamic Financial Services Indicators database. A first-class data that we get directly from the regulatory and supervisory authorities is what we use to come up with this report. And it covers quite a number of jurisdictions. For the Islamic banking, we have 25 jurisdictions, and then for Takapul as well, we have just launched it. And then for capital market, we are working on to have more members to join and provide that. Next slide, please, which is the last slide, hopefully. Next slide. Yes, next. So as a way forward to overcome some of these challenges, can you, yes. So, Niamas has already highlighted that some of these challenges, but I think for the IFSB is basically the smaller in size of the IFSI industry. And we also the challenge to ensure applicability of the standards, as well as the pandemic may also cause definitely a slowdown for the implementation of the standards. So these are the key challenges that are facing the standard setting bodies in strengthening the standards and principles. Next slide. Now, of course, specifically to the IFSB, we have, like every other standard setting body, we have definitely resource constraint. We have longer duration in developing standards due to a number of certain bottlenecks related to our Sharia review process. We also have some challenges with regard to lack of comprehensive and timely database for certain sectors, particularly the Takapul sector. The timeliness of the data is a challenge. And of course, some of the other internal challenges that we have. Next slide, please. Now, the way forward is to increase commitment, coordination, and collaboration among regulatory and supervisory authorities, regardless of their regional or continental geographical separate. We believe that this will also limit the challenges that the pandemic has posed to the stability of the global Islamic financial service industry, and it will reduce the burden of the challenges to the standard setting bodies. Increased standardization and collaboration among the standard setting bodies and the regulatory and supervisory authorities is one way forward. That we believe that yes, there is an increased collaboration, but also the standardization, we have to jointly come up with certain standard that will help the industry move forwards together. We believe if there is this greater coordination as well as standardization and collaboration, that will overcome some of these SSBs, will overcome some of these challenges. And of course, the integration and increased priority should be given to Islamic finance and Islamic social finance in economic recovery plan by OIC member jurisdiction. We believe this will drive growth. We have seen today, despite the number of population in Indonesia, the Islamic banking service industry is still, nowhere compared to the conventional banking total assets. So we believe, of course, the Islamic banking assets is, the Islamic banking and finance is just new, but 30 years over, and then the population, or we can say 40 years over, and the population is also should matter. So we urge the our members jurisdictions to have an increased integration of Islamic finance and increased priority to Islamic finance and Islamic social finance. That will help us to achieve the maqasid of Sharia. In fact, as highlighted by Prof. Mansur, the SDGs, we have done our own study. They are all aligned to majority of the Sharia, Maqasid Sharia automatically. So when we follow the Maqasid Sharia, we integrate Islamic finance and Islamic social finance in our Islamic economic recovery plans. Definitely the industry will grow, and then we will have shared prosperity as well as growth for the Islamic financial service industry. So on that note, I want to once again thank you for your time, and I thank the organizers for the opportunity for me to share my thoughts and points with regard to this in this conference. Thank you very much, Dr. Dada.
Thank you very much, Dr. Bilo, for sharing the primary role of the IFSB in trying to promote financial stability, particularly for the Islamic financial industry, by providing more guidance and also trying to also expand your advisory services to Islamic social finance, which to my opinion is along with the opinion of the other speakers that we need to do more collaborations and try to provide interface between one sector to another. So with greater collaborations, then we can also improve the relevance of these particular standard setting items to the regulatory framework of each and every member countries. And also here, the collaboration and standardization is also a primary keys for the implementation of standards. Thank you very much. And for the last speakers, may I invite Professor Kabir Hasan. Everyone knows about Professor Kabir Hasan, who has been the professor of finance in the Department of Economics and Finance from University of New Orleans. The screen is yours, Prof. Please.
Assalamu alaikum wa rahmatullahi wa barakatuhu.
Wa alaikum salam.
Thank you very much, Dr. Dadang, Dr. Velo, Prof. Mansur, and Dr. Yamas. And good night from New Orleans. It's 10 p.m. And actually, being the last speaker in the panel, everything that I wanted to say has been already said. Having said this, let me see whether I can sort of strew together everything what my previous speaker said. So this is my agenda. I'm going to talk about Islamic finance prior to the pandemic, during the pandemic, and how it can shape the future of this industry, and how we can move forward. So what happened? So coronavirus came. It is sort of a health crisis. Then it morphed into economic crisis. It affected the entire world. So there was lockdown, and I'm sure lockdown is going on part of Asia right now. Now, this is an unprecedented challenge. We never really envisioned how to deal with such a pandemic, economic slowdown, unemployment rose in many parts of the country. So the little virus threw a wrench into the world economy and turned the lives of billions of people upside down. So within this context, what is the impact of COVID-19 on Islamic finance? So there has been numerous studies done. Just I want to quote one. Estimates indicate the virus reduced global economic growth in 2020 to an annualized rate of negative 3.4% to negative 7.6%, with a recovery rate of 4.25% to 5.6% projected for 2021. And global trade is estimated to have fallen by 5.3% in 2020, but is projected to grow by 8% in 2021. According to a consensus of forecast, the economic downturn in 2020 was not as negative as initially estimated, due in part to the fiscal and monetary policies governments adopted in 2020. Now, generally, the economic growth forecast captured the decline and subsequent rebound economic growth over the second and third quarters of 2020, but have been challenged since by the prolonged nature of the health crisis and its continuing impact on the global economy. Now, what was true before the crisis, and this is some figure coming from 2020 Financial Stability Report, and I believe 2021 report just came out. So according to IFSB's Islamic Financial Service Stability Report released prior to the pandemic, following was the figure. So if you look at Islamic finance, the growth rate was 0.9% year to year, over 72% of the total industry. Capital market, 27%. Growth rate is highest, 27%. And I see Indonesia's Islamic capital market bigger than the banking sector. And the growth rate of Takaful was meager 1.3%. Now, there are some other stylish facts about the Islamic finance industry. Islamic finance assets are still concentrated in the GCC areas, about 42%, in Asia, 28%. 81% Islamic banking assets are concentrated in jurisdiction where Islamic finance is of systemic importance. And Islamic banking is considered as systemically important in 12 IFSB jurisdictions, and 80% of the sukuk outstanding are concentrated in jurisprudence where Islamic finance is of systemic importance. Now, impact of pandemic and policy framework and response strategy from Muslim majority countries, especially in enhancing productivity. What is this? Muslim majority countries have experienced a huge burden of COVID-19. The countries such as Republic of Iran, Turkey, and Pakistan are among the first countries outside of China to see a large-scale outbreak. However, very limited research on COVID-19 outbreaks among Muslim majority countries that focus on community engagement, the role of governments, as well as the government mechanisms. Many countries suffer low agricultural productivity, water scarcity, lack of infrastructure facilities, and production technologies. In the meantime, they are very fragile and vulnerable due to different kinds of problems like natural disasters such as droughts and locust invasions or political conflicts. Fiscal, monetary, and macro-financial and exchange rate and balance of payment related policy changes adopted in the countries in the world showed improvements in productivity, which could be assessed based on individual countries' circumstances. So IMF deliberated on these three essential questions related to productivity within the context of pandemic. Will foster digitalization lift productivity? And one of the issues of my previous scholars discussed, will relocation help productivity? with human capital be permanently impacted. Now, as I said before, the Islamic Financial Service Industry Development Review said downside risk of the global economy 2020, the magnitude and duration of COVID pandemic, health crisis leading to an economic crisis, OPEC plus coalition deal and oil output cut in impact on oil price volatility, foreign exchange volatility, long-term funding disruption, weakened real sector productive capacity, trade war, geopolitical impasse, and social unrest. Now, even though with all these things, global Islamic financial services industry maintained a positive growth of 11% year to year, while the IFS total worth estimated to be $2.444 trillion. It's the second quarter 2019. And the downside risks are expected to affect the projected sense of optimism in 2020, which we have seen, and my previous scholars have talked about this thing. I have talked about the segmental analysis before, so let me move forward. According to the IFSB's Islamic Financial Services Industry Stability Report, released in midst pandemic, and these are the some stylus facts. Already I said, 91.4% Islamic banking assets are concentrated jurisdictions, so Islamic banking is of systemic importance, and these are concentrated in Middle East and South Asia, and Islamic bank is the largest component of it. Sukuk is making inroad, about 84% of Sukuk outstanding and 77% Sukuk issuance in quarter 2019, which are basically in South Asia and Middle East. Now, Islamic finance industry strategies in maintaining stability, the resilience and stability that we talk about, and my previous scholars had mentioned very eloquently, a value-based intermediation approach that promotes the notion of circular economy in achieving SDGs or human development and progress ought to be implemented by the Islamic finance industry. Now, you know, there's a movement, we sort of West economy or linear economy talk about. Now, the question is, how can we make this zero waste economy and how Islamic finance can play a role into this zero waste economy or circular economy? And that is nicely tied to climate risk. And many people say this pandemic also as a cause or as a result of the climatic change that is happening all over the world. Already some jurisdictions like Malaysian Islamic finance industry are champions in this regard. A sustainability-based approach in the industry has been initiated at the regulatory authority level. And I'm also very pleased to observe how Indonesia is coming forward, and it has put all the infrastructure in place for the future growth of the industry, and hopefully it will take a very smooth upward turn very quickly. Strategy outlines three components such as tackling the first and immediate impacts in the short term, focusing on social impact and response and recovery in the medium term, and helping countries recover more sustainably for the long term. The several countries have begun exploring the potential of Sukuk vehicle as Islamic Development Bank called on the Islamic finance industry to promote sustainable and social Sukuk as alternative asset classes that have potential to counter the multi-fold impact of the COVID-19 coronavirus, as Dr. Dadang mentioned, how to integrate the Islamic social finance with commercial finance. And Islam embraces and encourages all types of innovation as long as it does not violate the principles of Sharia, and financial technology innovation that has disrupted the whole financial world and found acceptance in the Islamic finance world as well. Now, how do we shape the future Islamic finance industry in the post-pandemic era? To shape the future of Islamic finance industry in post-pandemic era, it is imperative to understand the specific challenges faced by the different segments in Islamic finance industry during the pandemic and to find adequate and sustainable solutions for them. So if you look at industry by Islamic banking, for example, now before COVID, to deal with the crisis, central banks have announced several measures for liquidity support to the banking sector. This include lowering reserve requirements, lowering of the regulatory capital buffer, bond and sukuk buying programs, and availability of central bank credit lines, reverse repo, and post-COVID solution proposed we can think of as an exercise. The policymakers need to introduce Islamic monetary market policies and instruments compatible with Islamic finance. The lockdown, the second one, measure adversely affected the income of many customers of the Islamic banks. As such, though customers are given debt moratoriums due to loss of their source of income, however, some customers were unable to get back the income due to inability to do work or failure of SMEs. And the future post-pandemic, the policymakers need to convert Islamic social finance with commercial finance to assist those unable to pay back their debts. And the third issue, the physical platforms normally used to provide banking services were closed, as providing service in a socially distant manner became the new normal. And the post-pandemic policy would be they need to provide incentives to fintech companies and technologies to collaborate with financial institutions to find effective and sustainable solutions. Furthermore, digital banking license frameworks need to be introduced. Now, if you look at Takaful, Dr. Bang spent quite a bit of time talking about Takaful. The contributions are unable to pay the contributors are unable to pay the premium or contribution, and due to loss of income or change in income, the customers were not able to pay the premiums due to Takaful policies taken. Could surplus in the participant risk fund with the consent of the contributors be used to help to pay out the contributions of those who are unable to make them? And the post-COVID solution, the policymakers need to provide mechanism to moratoriums to Takaful contributors, as well as a rescue mechanism to contributors unable to survive by the Islamic social finance mechanism. And finally, Islamic capital markets, increase in government expenditure leading to fiscal deficit warranting new funding options. So the private sector in many countries could not survive without the assistance from the government in the midst of the pandemic, and MSME, or the small sector, medium and small market enterprises, was particularly hit hard. Due to this, the debts of this government increased as stimulus packages were introduced to provide relief to those affected with the objective of reviving economies. And this support mechanism went from 10% to 30% from various countries to provide support mechanism to the capital market. Now, not only capital market, the entire economy. So the policymakers post-COVID solution need to provide to introduce alternative funding options by Islamic financing mode, such as by equity participation, likewise digital and technology frameworks to list the companies and to issue sukuk and deal with crowdfunding need to be introduced. And this also includes enacting proper electronic know your customer frameworks required for the purpose. Now, the opportunity and challenge of Islamic finance for the post-COVID economic recovery. The COVID-19 pandemic has created a huge disruption in the finance world, and it poses another challenge to Islamic finance after the global financial crisis to provide an alternative and sustainable finance. The worst hit during the ongoing pandemic are those who has a large market share in industries such as microfinance, small and medium enterprises, and retail lending. In order to fight the COVID-19 outbreak, Iran requested $5 billion from the IMF, while Pakistan received an additional $1.4 billion from the IMF to cope with this increasing number of COVID-19 cases. Nigeria also took on a similar relief measures as IMF approved $3.4 billion in emergency financial assistance to support Nigerian authorities' effort in addressing the severe economic impact of the COVID-19. Now, the adoption of digital finance and financial technology is becoming crucial to industry and post-COVID-19. Now, the Islamic financial instrument, the so-called Islamic social finance, has a huge potential, and Islamic finance in this disruptive period can show its value additive or uniqueness. There are many countries in the world who successfully had used Islamic social finance institutions and instruments to rebuild the economy. For instance, in Malaysia, the first digital sukuk Prihatin was issued by the government targeting retail market to recover from the pandemic. To maintain the supply of funds received with the demand, we need to ensure that contributors are being motivated towards doing good in the society by providing them financial and non-financial incentives to them. And also, we know in Indonesia, for example, Basnas, the Zakat agency, has done a spectacular job providing, food to the needy people during this pandemic, and also taking care of the deceased person. In Islamic social financing, certain instruments have been identified as tools to help the needy, particularly who are badly affected by the pandemic. Zakat, Sadaqah, and Infaq can play a significant role, especially in providing financial aids to them. Zakat has the potential to ease the financial institutions for the huge collection recorded, and also congratulate the Indonesian government focusing the Zakat and Sadaqah and also Waqf in order to promote as an alternative or as a bridge to the Islamic commercial finance. Also, Islamic banks are more exposed to SMEs, microfinance, retail lending, particularly in Asia. There is a crucial need to minimize the economic consequence of the pandemic and safeguard the vulnerable population of the society. Another instrument is Waqf, as India owns a substantial amount of Waqf properties in the world in terms of lands, religious buildings, and graveyards. And also, one estimate shows in Indonesia, you have $60 billion worth of uncultivated land, which can be brought into the mainstream economics and can provide relief to the vulnerable people or in order to reduce poverty. And finally, what is the way forward? How to make Islamic finance more resilient? We have to converge Islamic social finance with Islamic commercial finance. We escalate adoption of technology in offering Islamic finance. We have to link Islamic finance with achieving the United Nations Sustainable Development Goal. We have to create a value-based intermediation approach in offering Islamic finance products and services, very similar to what has been done in Malaysia. Promoting circular economy initiative by Islamic finance, as I mentioned before. Also complementing Sharia governance with human governance, introducing adequate and equitable mechanism to deal with genuine defaulters, and introducing Sharia governance standards for Islamic social finance. So, number one, innovative Islamic financial products serving different segments of population is required to be introduced. So in the pandemic, it is realized that financial assistance to all segments of population in an equitable manner is required, and debt-based products are not compatible for this. As such, equitable-based Sharia-compliant frameworks could be introduced with incentive to take Islamic finance industry to the next level. Legal, regulatory, tax governance framework used in finance industry need to cater dual financial system. During the pandemic, again, it is realized that Islamic finance can be the alternative financial system for conventional finance. However, the full potential of Islamic finance can only be tapped fully by creating a favorable legal, regulatory, tax, and governance framework required for Islamic financial system. For instance, Basel III application to Islamic financial system and capital adequacy requirement, including risk framework that support the growth of Islamic finance industry, is required. This includes enacting an Islamic monetary policy framework with the lender of last resort. Number three, technical cooperation and information exchange programs need to be activated between countries to strengthen Islamic finance industry. All countries who are successful in implementation of Islamic finance need to share their success stories with those countries aspiring to do that. In this regard, the reverse linkage program of ISDB needs to be acknowledged, and such initiatives need to be effectively implemented in a global level, even among non-IIC or ISDB countries as well. Financial inclusion by Islamic finance need to be promoted. Financial inclusion need to be promoted by Islamic finance mechanism as strategic policies for that at global level need to be introduced. And in this regard, regional standard setting boards like Aifc in affiliation with IFSB, ISDB, OIC could take the initiative to drive this strategy among the policymakers at the global context. We need a unified effort in this matter. Number 5, law harmonization efforts need to be activated. Islamic finance cannot be implemented without having a proper legal environment to implement this. The legislation applicable to Islamic finance not only includes Islamic finance related laws, but it also includes regulatory laws like tax laws, substantive laws like contract laws, sale of goods laws, and hire purchase law, and adjective laws such as evidence law and court procedures that ought to be aligned with Islamic finance principles. If not, the full implementation of Islamic finance will be inhibited. Therefore, the law harmonization initiative, like in Malaysia, need to be activated in other countries to ensure that there is a level playing field for Islamic finance with conventional finance. And global standardization of Islamic financial documentation should be escalated. Islamic finance practice at global level need to be standardized to increase cross-border transaction and increase certainty in international commercial transactions. IIFM has played an important role in this regard, and this process needs to be escalated. And this way, the general perception that Islamic finance transaction documentation complicated will be changed. And final slide. Policies to enhance liquidity in Islamic capital market need to be created. Illiquid capital market leads to slow economic growth, and such ways to increase liquidity in Islamic capital market in countries need to be formulated through adoption of right rules. And finally, fintech and digitalization of Islamic finance is required. There is no doubt that fintech and digitalization drive is required to take Islamic finance to the next level. As such, proper policies and rules, including sandbox initiatives, can be implemented in countries for the growth of Islamic finance in this regard. And finally, one word I want to say, we have an historical opportunity during this pandemic and all the hoopla hula that has been created. We can show the real face of Islamic finance, and we can offer Islamic finance as truly value-based, ethical alternative to everyone, Muslim and non-Muslims in the world. Thank you very much.
Okay, thank you very much, Prof. Kabir. I think you have summarized all the materials from the previous speakers. Thank you. Because of due to the limitation of the time, I have already tried to summarize the question from the floor into one question. For Dr. Bello and Prof. Kabir to respond to this, as we may know that pandemics leads to recessions, which entails problems, and it's normally after crisis, it will be followed up by the economic growth, where the Islamic finance have to be able to grab this opportunity to bounce back. And from your perspective, particularly from Dr. Bello as the standard setting body internationally, and then also from Professor Kabir Hasan as the prominent economist, what will be the first and the most important strategy to be applied? In a very short explanation. I start with Dr. Bello, please.
All right, thank you very much, Dadan, for this very important, simple but difficult question to answer, because what is most important is actually dependent on the priority of the particular jurisdictions and depend from one jurisdiction to another. The size of Islamic finance differ from one jurisdiction to another, and then the impact also of the pandemic differ from one jurisdiction to another. So definitely there will be no single answer that will satisfy your question, but I will try to perhaps maybe share my views with regard to your question. I think all right, let me maybe start from the regulator's perspective before I look at the general, economy perspective or the institutions perspective. I think the regulators, they found themselves in a very difficult balancing act, very difficult balancing game between resilience, stability, level playing field, as well as economic growth and economic sustainability. So that's really a challenge, and that's why this a number of policy responses has been initiated. But at the same time, we have unanimously agree and know that whenever there is a crisis of this nature, the crisis always come along with opportunities. So we want the regulators to please articulate these opportunities as regulatory and supervisory authorities, and then ensure that there is an infrastructure, relevant infrastructure in terms of guidance, regulatory framework, principles, and maybe the level of national awareness on some of these opportunities, and the safeguards are put in place so that the potentials of these opportunities can be explored. One of those is the Islamic social finance, as we discussed a lot today, as an important tool for economic recovery. And we have seen quite a strong commitment and development by the Indonesia regulatory and supervisory authorities, particularly Bank Indonesia and OJK, as well as the government of Indonesia, in promoting Islamic finance in many ways. Actually, the first cash wakaf scope was issued, and quite a number of initiatives has been done. So we want to see that more of a priority, as I mentioned in my presentation, priority need to be given in the national agenda, particularly in the national economic recovery with regard to Islamic finance and Islamic social finance. We believe this is a way forward. Now, for the market players, what I will say is that the time has come for them to maybe have a reassessment on the way they apply the Islamic finance philosophies, particularly with regard to the contract that they structure. We have seen quite a number of non-performing financing has been impacted, and it is on the upward trend in certain sectors, particularly regarding manufacturing, as well as in the household and wholesale banking in the banking sector. So this perhaps is as a result of the contract that they are basically using, which is more or less more of debt-based contract like Murabaha, as well as Ijara contracts in terms of their financing. Now, there is a need for them to come up with a little bit more shift in terms of the desire for bottom line, the profitability concept, but rather now it is time for them to have a more socially responsible kind of product that will promote inclusiveness, it will promote some additional responsibility from the side of the institutions. I think these are very, very necessary. In a nutshell, we are not saying that they must embrace entirety their financing into profit sharing or profit and loss sharing contract, but at least maybe some of these things need to be looked into. So the way they now structure the products, the way they structure the services, I think this need to be reassessed and then more towards corporate social responsibility, social to the society, as well as the promotion. And then finally, the government, we want to see a more commitment in terms of the political will by the governments and is in promoting Islamic finance, because over the years, the conventional finance for over, I think, hundreds of years has been playing the dominance. Let's give more opportunity, not just because now they are racing for vaccine finance, they're looking for alternative to finance vaccination, but we want to be the Islamic finance to be part of the mainstream agenda for governments in many jurisdictions. I believe this will help promote the resilience of Islamic banking and finance. And finally, a regional coordination or cooperation among the OIC member countries. This will really support and help. And of course, implement the IFSB standards.
Okay, thank you very much. And for Professor Kabir Hassan, 3 minutes of your response to my question, please. You're still muted, Prof. Can you unmute your microphone?
Yeah, Well, being the last speaker again, what I wanted to say, Dr. Valu has said already, but let me say a few words to complement what he just said. If you look at, and IF has been any other organization, the Islamic banking is the dominant player. But unfortunately, Islamic banking is based on a premise, and which, if you look at very deep analysis, and I'm sure all of you have done empirical work, it's really no different than a conventional banking. Yes, contract-wise it is okay, but essence-wise, this essence versus format, this debate continues, and it still does. Let me give an example, one from one jurisdiction. In the Quran it said, if a debtor cannot pay on time, give them the time. And this time was not, this. Now, when you talk about the social cohesion, Islam is a social movement, right? So you live in a society. Now, for some reason, you cannot pay because of pandemic, your business suffered, and you have taken borrowed money from the bank. If you follow the Sharia principle, you have to give them time. So what is doing some jurisdiction? They're asking the government to pay them because of their loss, but they're supposed to take loss. They're supposed to risk sharing finance. So having said this, I want to say always, I have been saying, unless you correct the model, the fundamental model of Islamic banking, not taken from the fractional reserve banking system, let Islamic bank be a Murabaha banking. Let's do short-term financing, not to get into long-term financing, because from the conceptual standpoint, an Islamic bank cannot fathom that risk and return combination. So having said this, what is the alternative? As Dr. Valu said, we really need to go to the non-bank financial actors to do this thing like Islamic social finance. One of this area that I want to emphasize is zakat. This is one of the 5 fundamental pillars, and I have done some empirical work in the context of Bangladesh. I have shown if the government can integrate the zakat mechanism with its fiscal policy tools, they can really substitute a lot of activities that the tax revenue can have to pay for it. About 20 to 30% of the national ADP, annual development plan, even in poor country like Bangladesh, can be taken out of zakat fund. So that's Islamic social finance. We talk about Waqf. Waqf is another tool. And if you look at the history of Islamic economies, from the golden ages, we see the Waqf has played a critical role. In Indonesia, there's a huge amount. In every country, the Waqf, the zakat, we really need to bring those two sectors, the Islamic social finance and the commercial finance, to have a holistic view in order to tackle all this problem. And right now, that is even more important. We need to really learn from each other's experience, like cross-border, as I mentioned in my presentation. One other thing, we really need human capital. Unfortunately, in Islamic finance, all along, and I do a lot of research, we really need to dig into the data. Instead of preaching, we need to really practice it. We need to make policy formulate on the basis of real data rather than on the preaching standpoint, because it's not going to work. We really need to collect data and see and formulate policy, and that is a very much Islamic as well. Thank you.
Thank you very much for your insightful presentation and discussion. So summarizing in 1 minute about this session, when we try to develop and then make the use of the Islamic finance at maximum level, don't forget about 7 things: human capital, conceptual development and literacy, collaborations to push the broader market base, engage with global initiatives, macro and micro policies, and also don't also forget to develop along with the technology. With that, again, on behalf of the organizer, I would like to thank the prominent speakers for your contribution to the program, and I will hand this over to the MC. Assalamualaikum warahmatullahi wabarakatuh.
Walaikum assalam.
Thank you very much to the chair of the discussion and all the prominent speakers for bringing us to a comprehensive panel discussion. Now, I would like to kindly remind all participants to fill in the feedback form, which you can access through the link fiscal.id/fifth-AIFC. Your insights will help us shape better future events similar to this. You can see the link on the screen, or you can just simply scan the QR code that is displayed on your screen. Excellencies, distinguished guests, ladies and gentlemen, before we move on to the next agenda, we would like to present you some interesting and informative videos, so please have a look.
Indonesia is a country full of diversity with abundant natural and cultural wealth. It is home to the largest Muslim population in the world. As a country with the largest Muslim population in the world, Indonesia has great potential as well as challenges in developing a Sharia-based economic system. An economic system that focuses on the principles of justice and virtue in all of its processes. Justice and virtue for every party involved. A system that covers all aspects of people's lives, from industry to financial services and investment, from halal food and halal tourism to digital media, from halal pharmacy and cosmetics to Muslim fashion and more. The development of Islamic economy and finance has developed significantly in the last 2 decades and will continue to grow in line with the increasing Muslim population in the world. The KNEKS, or the National Committee for Islamic Economy and Finance, exists as a non-structural state strategic institution led directly by the President, serve as a mediator and catalyst in developing the Islamic economy in Indonesia. KNEKS is mandated to accelerate, expand, and advance the development of the Islamic economy to support national economic development. KNEKS, which was originally named KNKS, was a recommendation from the Master Plan for Indonesia Sharia Financial Architecture, formed through Presidential Regulation No. 91 of 2016, concerning the National Sharia Finance Committee, which later expanded its scope of work to become KNEKS through Presidential Decree No. 28 of 2020, concerning KNEKS. Having a vision to make Indonesia an independent, prosperous, and civilized Indonesia by becoming the world's leading Islamic economic center, KNEKS has 4 main strategies, namely strengthening halal value, strengthening Islamic finance, strengthening micro, small, and medium enterprises, and strengthening the digital economy. Indonesia Sharia Economic Master Plan was created as a common guideline for the Sharia economic system. As the world's largest Muslim country, Indonesia is ready to be the world's leading Sharia economic center.
Excellencies, distinguished guests, ladies and gentlemen, I hope you feel more refreshed after seeing the previous videos. For now, we are going into the next session. Without further ado, we will begin the third session on the 5th AIFC, which will focus on Islamic finance role, participation, and potential in supporting sustainable and inclusive growth. Our chair of discussion is Dr. Titi Anas, advisor for sectoral fiscal policy formulation to the Finance Minister of the Republic of Indonesia. She is also a lecturer and researcher at Universitas Padjadjaran, specializes in international economics, industrial organization, investment policy, and small-scale business development. Dr. Titi Anas, good morning.
Good morning. Can you hear me?
Yes, I can hear you very well. Before we have the discussions, before we have the discussion started, I would like to invite all the esteemed panelists to turn on their cameras as well, for we are going to have a brief photo session as commemoration. I would like to invite Dr. Mahmoud Mohieldin, Executive Director for Arab Republic of Egypt, International Monetary Fund. And also please join us, Professor Dian Mashita, Professor of Finance in Universitas Padjadjaran, Mr. Anwar Bashori, Head of Department of Islamic Economic and Finance, Central Bank of Indonesia, and last but not least, Mr. Muhammad Sani Ismail, Principal Financial Sector Specialist from Asian Development Bank. Well, if everyone is ready, I will count down. 3, 2, 1. Thank you very much. And my pleasure to hand it over to you, Bu Titi Anas.
Thank you very much. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin wassalatu wassalamu ala asrofil anbiya'i wa mursalin wa ala alihi wa ajmain amma ba'du. Assalamualaikum warahmatullahi wabarakatuh. Distinguished ladies and gentlemen, welcome to panel session 3, where we are going to learn about further details on how the Islamic financial role, participation, and potential in supporting sustainable inclusive growth. We learned from this 2 days conference that the Islamic finance grew fast and its contribution to accelerate the recovery of post-COVID-19 is potentially high. We have, although halted by the COVID-19, the growth of the Islamic finance industry quite high, and it's expected to be growing faster in 2022. Ibu Mari Pangestu yesterday in her keynote speech suggested that Islamic finance can also play an important role in a more green and inclusive recovery post-COVID-19. How Islamic finance is going to play an important role in sustainable inclusive growth, we are going to learn from 4 distinguished speakers that are with us today. We would like to invite participants to pose their questions for speakers in the Slido that provided by the organizers. For distinguished presenters, I would like to ask for 15 minutes each of presentation due to limited time that we have, so we have enough time to have discussions with the participants. Without further ado, I would like to invite the first speaker to present her talks and ideas about sustainable and inclusive growth, Islamic finance policy strategies and initiatives in OIC countries during the pandemic era and beyond. The presenter is Professor Dian Mashita. She is one of my favorite Islamic economists. She's also a professor of Islamic finance and banking at University Pajajaran, one of the 10 most influential women economists. And she's also recently appointed as the Dean of the Faculty of Economics and Business at the Indonesian International Islamic University. Ibu Dian, the time is yours. Please limit for 15 minutes presentation. If you like, I will notify before the 15 minutes. Please.
Thank you very much, Dr. Titi Anas. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin wassalatu wassalamu ala israfil anbiya'i wal mursalin wa ala alihi washabbihi ajmain. Amma ba'du. Yang terhormat Bapak Profesor Bambang Bojonegoro, Bapak Anwar Basori, Mr. Muhammad Sani Muhammad Ismail, Profesor Muhammad Muhyiddin, prominent speakers, guests, conference participants, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. It is a great honor for me to be here today to have this opportunity as one of the speakers to the 5th Annual Islamic Finance Conference. Today, the OIC countries and the world at large are faced with the pandemic unlike any in the last century. A pandemic that spread fast, kills people, and destroys their social economic life. As in the case of many countries around the world, COVID-19 pandemic constitutes an unprecedented challenge with severe health and socio-economic outcomes that have already started to show historic and daunting consequences of the OIC countries. In this session, I will share the topic sustainability and inclusive growth, Islamic economic and finance policy, strategies and initiatives in OIC countries during the pandemic era. For the agenda, we have the first agenda, socio-economic impact of pandemic in OIC countries. The second, economic and financial strategies and policies, Islamic economic and finance initiative, and the last one, role of the Islamic finance in support socio-economic recovery. Please, next. Okay. The OIC member countries are not immune to the wave of socio-economic shock caused by the pandemic. Like many other countries around the world, the OIC member countries have started to witness the collective effect of the virus on their economies and societies. In a rapidly changing environment, it is excessively difficult to measure the real economic impacts of COVID-19 pandemic. For example, the level of production, employment and education, trade and finance, tourism and transformation, agriculture, food security, social relation and behavioral, and health, women, elderly children, and disability. Next, please. Okay. In the field production and growth, we see in the figure, in general, there is a sharp decline from the end of 2019-2020 due to the pandemic. When compared to other country groups, OIC countries are expected to be affected less severely than the developed countries, but at around the same level with non-OIC developing countries. The OECD estimates the decline in the level of output between 1/5 to 1/4 in many economies, with customers' expenditure potentially dropping by around 1/3. Next, please. Regarding employment rate, according to the latest estimation, ILO experts said that more than 25 million increase in the number of unemployment people. This would correspond to around 0.7% increase in the global unemployment rate under current levels of labor force participation rate. If the rate of unemployment increase at the same rate in the group of IC countries and reach 7.4% from 9.7%, the total number of unemployed persons would increase from its previously estimated level of 47.7 million to 53.3 million in 2020. If unemployment rate would further increase to 7.7%, this number would exceed 55 million people. This would result in huge policy challenges for OIC government in accommodating an additional 8 million unemployed people and tackling the socio-economic problem of affected population during the post-crisis period. The education sector, you can see in the right picture, in OIC member countries has also been hit particularly hard by the pandemic, putting 432.6 million learners out of schools, with the highest concentration of out-of-school learners in East and Southeast Asian member countries. Next, please. Concerning trade and finance, where oil prices are around 42% below their 5-year average level and other commodities are around 1 to 5% below their average level, intra-OIC export will fall by 4.9% and the export to the world will fall by around 17%. This would increase the share of intra-OIC export by 15%. An additional decline in commodity prices in scenario 2 and scenario 3 would bring additional losses in export volume, but they would imply greater share for the intra-OIC trade. The figures show the possibility changes in intra-OIC export volumes and total exports the world based on these three scenarios. As it is observed, the fall in export to the world is expected to be sharper, driven mainly due to the fall in the prices of mineral products. Next, please. How about the tourism and transportation? We have the graph here, the potential impact of COVID-19 on international tourism in OIC countries in 2022. Intra-OIC countries' arrival are projected to be recorded at 68.2 million in scenario 1 and 59.7 million in scenario 2. Those figures are significantly lower compared to the baseline projection. In fact, the estimation made by the International Civil Aviation Organization are also in line with the projection made by UNWTO on the severity on the crisis in the global tourism and transportation sector stemming from COVID-19 pandemic with significant implication on OIC countries. Next, please. Health. 38 OIC countries are facing a critical shortage of health workers with less than 44.5 physicians, nurses, and midwives per 10,000 people. The density of health workers is even less than 10 per 10,000 in 14 countries with critical shortages. Due to the nature of their jobs, health workers are facing the greatest risk and vulnerability to contract and spread the COVID-19 while helping others. In fact, many of these health workers are working in the healthcare setting with a very weak and poor infection prevention and control measures. As we show in the figure, 20 out of 46 OIC member countries with data availability of ICU beds is less than 1 per 100,000 people. Only a handful of OIC member countries like Turkey, Lebanon, Saudi Arabia, and Kazakhstan have the sufficient number of the ICU beds to deal effectively with the surge in severe COVID-19 patients. Next, please. How about the women, children, youth, elderly, and people with disability? The figure shows that even the top OIC countries with extensive social protection schemes were below the world average. The situation even worse. The for the disadvantaged and vulnerable population who now must deal with the consequences of the outbreak of the pandemic with restricted and inadequate resources. We can see in millions of children could fall into extreme poverty by the end of 2022. And we can see also there are reports from countries in every region suggest the restriction in movement, social isolation, coupled with increased social and economic pressures are leading to an increase in all form of violence against women and girls. And also we can see for the elderly, an estimated 66 people aged 70 and over have at least one underlying condition, placing them at increased risk of severe impact from COVID-19. People over 80 years old are dying at 5 times the rate of global average. And in Indonesia, the highest rate of people with disability, with the 21.3%, followed by Kyrgyzstan, Jordan, Turkey, Uganda, and Mozambique. Next, please. Okay, how about the social relation and behavioral? Although the effect of COVID-19 outbreak were more visible and projectable in the health and economic sector, and the impact on disadvantaged and vulnerable population and full impact of the pandemic in terms of social relation and behavioral is still not fully discovered. Okay, we can see here outbreak risks are minimized in high vulnerability setting, particularly in elderly homes, mental health facilities, and people residing crowded places. And the workplace preventive measures are established with physical distancing, hand washing facilities, respiratory etiquette in place, that the communities have a voice and are engaged in the transition. So it's a new normal for us today. Next, please. So we come to the next chapter, economic and finance policy and strategies. We can talk about economic policy, social policy, and economic and financial strategies. Next, please. Okay, the healthcare system are facing the biggest health crisis in the century, require effective policy to combat spread of coronavirus, and we see from 11 OIC member countries have received financial support worth from World Bank, 428 million US dollar. This resource will definitely enable the recipient OIC member country to implement programs and measures to slow and limit the spread of COVID-19. And from economic policy, many OIC countries responded to the COVID-19 outbreak from the economic policy perspective through implementing a wide range of fiscal and monetary policies. In the figure, we can see out of 52 OIC countries for which the data are available, 42 developed and implemented a form of a fiscal stimulus package to sustain and encourage essential economic activities at the first stage and all economic activities in the second stage. And we can see in social policy, numerous OIC countries have implemented social safety measures targeting disadvantaged and vulnerable households and social groups. Social protection services carry immense importance, especially in times of dire need. Tunisia announced exceptional social help measures to target its most vulnerable household. The support is available for children, elderly persons, and people with disability. The aid supplies cash transfer to those most in need. In a comparable manner, Egypt has extended its Takaful and Karama social aid program to the most vulnerable. Okay, next, please. So, how about the economic policy? We see from in this picture, we have OIC countries. Every country they also have their own economic policy for COVID pandemic. Bangladesh, the government Bangladesh removed all tariff and taxes on the list of COVID-19 related product to ease the access to product related related with the COVID-19 in the country and support the vendors and traders, improving life of the poor through sales of rice at 1/3 of the market. Burkina Faso, as the government of Burkina Faso established an economic recovery fund for companies, a solidarity fund benefiting in informal sector, including women, several measures to support severely hit sector such as tourism, crisis-affected people, and businesses get help. So they also suspend government fees charged on informal sector operators for rents and provide financial support for the water and electricity bills of the most vulnerable social groups. In Indonesia, as we know, our government announced a set of fiscal measures to support the sector that are affected more from COVID-19 outbreak, with financial incentive to support tourism, airlines, and property industry.
2 more minutes, Ibu.
Okay, so we can see Iran, Malaysia, Turkey, and Nigeria, and Saudi Arabia also do the same. They also have specific economic policy. Next, please. In social policy, they also have a different program: social protection services, community level initiative, digital responses and awareness, education or e-learning, and art culture. Every single country out of 56 OIC member country, they also have different interesting program to combat social policy. Okay, next. So how about the economic financial strategies? In national level, we have a fiscal stimulus package, completing fiscal and social policies, protecting and supporting micro, small, medium enterprises, keeping domestic food, implementing proactive and effective monetary policy, investing cashless payment system, reducing foreign exchange pressure, protecting the food needs of most vulnerable group, and reinventing worker after the crisis. Next, please. And the previous one in national level, in this we have strategies for intra-OIC level, reducing tariff and non-tariff barriers to enhance intra-OIC trade, forming an OIC economic policy coordination, enhancing international cooperation to keep international food trade open, supporting the effort and comprehensive response, strengthen regional cooperation, extended mechanism to harness Islamic social finance for funding COVID-19 response, collecting analysis data, using visa policies, and considering debt relief and restructuring OIC countries. Next, please. So, what the initiative? Next. So, Islamic finance, Islamic banking and microfinance especially could take a role with support from the government and concerned authority to provide COVID-19 financing program. Small medium enterprises has been given some reprieve during the downturn caused by the pandemic to overcome an ensuing impact and large-scale bankruptcy and employment. So there are how to mitigate the crisis. Islamic microfinance can play pivotal role to differing monthly installment, upcoming repayment for a period of several months, offering a grace period or repayment holiday, or offering reschedule, restructuring of financing, and or reduction existing fees related various banking firms. And Islamic fintech, we see here, Islamic fintech has become the fastest growing segment in financial technology among OIC countries. This estimate Islamic fintech 49 billion in 2020. And so Islamic crowdfunding can be one of Islamic fintech product. Next, please. In Islamic capital market, we also have Sharia stocks, sukuk, and Islamic investment funds or Sharia mutual fund. Next, please. So, what the role of Islamic social finance? To harness Islamic social finance for funding COVID-19 response, the existing gap in funding needed in member countries facing COVID-19 crisis can be bridged by the use of innovative source of financing. In this context, Islamic social finance can be a sustainable source of funding for IC member countries. Next, please. So, Islamic social finance, zakat, infak, sedekah, wakaf, Islamic crowdfunding can fulfill the existing gap in funding. So we can see source of Islamic social finance such as insurance or takaful, wakaf, kes wakaf, CWLS, kes wakaf link suku, Islamic microfinance, with Kardu Hasan, zakat, sadaqah, Islamic crowdfunding, and multi-agent non-profit loans providing by ESDB, ESV can help finance preparedness measures, provide immediate healthcare funding for vulnerable population, and finance recovery program. So the final Islamic social finance can play a significant role in funding COVID-19 response effort at the national level with direction from the intra-OIC institution, including SDB, ESV, and in collaboration with international agencies. Okay, next. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. So it's not only Indonesia that badly hit by the COVID-19, but also all the members of OIC apparently. And those countries already undertaking needed response, either it is health response, economic, social, and the banking has also put ease burden to the SMEs and firms in general of the negatively negative effect of the COVID-19. So, Ibu Dian, allow me to invite the other three speakers first before we go into the Q&A session. Hope the participants already lodged in their questions for Ibu Dian. Now I would like to invite Bapak Anwar Basyori. Selamat pagi Pak Anwar Basyori. Assalamualaikum. Bagaimana Pak kabarnya?
Alhamdulillah baik Bu Titi.
Alhamdulillah. Pak Anwar will talk about Islamic finance structural reform towards sustainable inclusive growth in Indonesia. Pak Anwar Basyori is the head of Department of Islamic Economic and Finance at the Central Bank of Indonesia. He is also active at the Masyarakat Ekonomi Syariah and also at the Islamic Economists Association. Without further ado, Bapak, I would like to invite you to present your thoughts. If it is possible, 15 minutes, Pak. Silahkan, Pak.
Thank you, Bu Titi. Just to make sure my voice is clear or?
Very clear, Pak.
Okay, thank you. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Maybe I will greet first for honorable prominent speaker here, Prof. Dian Masista from Pajajaran University, Prof. Mahmud Muheldin from IMF, and Brother Muhammad Sani from Asset Development Bank, and also distinguished participants, ladies and gentlemen. And also, it's great pleasure for us and many thanks for the organizer and the committee of the 5th Annual Islamic Finance Conference that held the great occasion, I suppose, that since yesterday, so many thoughts, so many views from a prominent speaker we can enjoy and we can update about that. In this session, maybe I will try to make some topic, maybe continue from the Prof. Dian say that how to make the Islamic finance role more role in Indonesia, specifically in the case. So that's why the title Islamic Finance Structural Reform. Of course, this is still thought, so maybe this is to encourage the discussion in the session. This is not the final decision, so I will invite maybe any participants, any distinguished participant can give some feedback for us is very valuable, because how make the Islamic finance can contribute for their, of course, the recovery economic now still struggled by the government, central bank, and also from the other institution, how to make the economic policy, economic growth in Indonesia back to the past. Back to the past, and then getting better, and of course for the prosperity. And then the next slide, I will try from the concern from the 3 point here, talking about the Syariah economic finance in BI policy people. Maybe this is the new one because we are the central bank in front how to formulate implementing the BA policy and inside of that also including accounting but the monetary and the macroprudential in accordance with the Syariah principle. And then the second one, the role of the Islamic social finance, also why this is quite important compared from the commercial, because the commercial Islamic finance also important, but the potential Islamic social finance seen yesterday that already disclosed and pointed out by some prominent speaker how the role and how to build the inclusively and make a sustainable growth. And then the last one, the mode of the implementation. Maybe I will show one of the example, like the Excellency Ibu Sri Mulyani yesterday pointed out. There is the creative, the model, the blended fund, cash wakafling suku. It is also advisor by Prof. Dian Masista from last year. So now we struggle how to make this instrument, the blended fund, can contribute the real contribution from the economic recovery in Indonesia. Please, next slide. Talking about the Bank Indonesia policy framework, maybe this is only the brief because some central bank also running about the monetary policy. But during the global spillover, the global externalities, and also the pandemic happened in March and April last year, it's not enough only if the central bank only talking about the interest rate policy on the monetary policy. We have to maintain also the exchange rate intervention and combine with the macroprudential policy. Of course, monetary policy is the mandate from the central bank, the Bank Indonesia, how to price stability maintain, but the macroprudential policy also to maintain financial system stability. When there price stability at risk and also the financial system stability at risk, if we're talking only the monetary policy itself, is not sufficient. So that's why Bank Indonesia to combine, to integrate it, both the policy to combat about the struggle to make the recovery on the LPS, how to combat, how to financial stability itself to maintain also the price stability. And also now, because the digitalization era, the payment system policy is the most important, because to connecting the inclusion unit with the financial, with the unbankable, they should be in the financial system digitalization. It is in the good ways how to connecting with the inclusiveness and also the SME, because we know that the small medium enterprises unit in Indonesia is very role important during the pandemic. So how to make during the digitalization, and then how to make the role all the unit in economy can be contribute on the economic activity. The payment system policy using introducing digitalization and quite important. So during as a monetary and macroprudential monetary authority, BI has maintained an accommodative policy make in accordance with the Sharia principle to support national economic recovery by supporting liquidity in the Sharia bank industry to stimulate Sharia financing. Like yesterday point out, maybe before session, maybe from the Aifc say that why the Islamic banking quite resilient during the pandemic, still growing the financing, the channeling credit to the real sector still growing 8%, compared with the conventional bank is the contracting less than 3%. So this is the evidence that the quite important why we should address about the Islamic finance in Indonesia. The next slide. Now we just give a brief about the dimension. We thought that if we're talking about the dimension of the Sharia business activity, we try to make some 3 dimensions. The dimension of product. Of course, today, the halal lifestyle in Indonesia is growing. We know the halal food is spread out. From the millennial, there is so many food, so many restaurants everywhere should be in the halal lifestyle, halal product. So most of the halal product have already certified by halal product. This is talk only the halal or humble material. This is the dimension of product. But in the mainstream business, also talking about now the branding of the healthy product, organic product, sustainable ethical fashion. They don't put upon the label the Sharia business activity, but the branding, the value of the Sharia put in there. So it means this is like a even we do not directly in the Sharia, but the society talking about the sustainable, ethical food, healthy, organic, eco-friendly. During the pandemic, we know and aware that the people now prefer to make the healthy food. We can order by e-commerce or sometimes healthy food, organic food, go to the basic need during the pandemic. And then the second one about the financing dimension. The financial dimension, of course, we've talked about the principle, Sharia principle, no riba, no maisir. But from the mainstream business, we're talking about profit and loss sharing, value-based financing, equity financing. So now there is a branding, not direct to the Sharia principle, but the value of the Sharia principle have adopted by the society with the other branding. So this a good one should be how to literate about the value. And then the last one is the business conduct, the ethical business. But unfortunately, the three dimension is rare. We can find about the product, the halal food, and finance buying the Sharia, and also the business conduct. Sometimes we only find about only the product certified because this is no halal or harmful material ingredient. I mean, certified halal only connected with the end product, not connecting the financing. So this is the harmful. This is a challenge. Why in the Indonesia is the good size of the product on the halal food, but still not connected with the financing. So this is the humble. This is the challenge for of course for central bank, and then for KNKS, and then from the government policy, how to make the gap between the product and financing can be fulfilled and then contributed. The next slide. I will try to make some mapping how the connecting about the Islamic economic principle and the implication and then economic growth. Sometimes we're talking only in the spirit by one. If we're talking about the Islamic economic principle but not connecting economic growth, maybe a little bit there is a not connected. So it's hard for the mainstream to know what the impact about the Islamic economic principle to an economic growth. Yesterday, Excellency Ibu Sri Mulyani is very give a brief, the value brief, how the role of the government with the Islamic economic principle from the economic growth. We try to hear if they talking about the Islamic economic principle. Of course, the moral values is very important. Ukhuwah, care to each other, social bonding. Indonesia is the social bonding is very important. Care to each other. During the pandemic, we know the crowdfunding. Prof. Dian said that the crowdfunding and Islamic social finance is growing up in Indonesia during the pandemic. So in Indonesia also the first ranking in the generosity country in the world, because this is the ukhuwah, care to each other, social bonding. What the impact? The impact the charity fund, not only from the Muslim, non-Muslim, also they can raise about the charity fund accumulation, and also from the Muslim there is the infaq and sedekah and wakaf. This is the voluntary. This is increasing. And then we're talking about the economic activity principle, still Islamic economic principle, obligation of zakat. Talking of zakat, not only 2.5 obligation, but zakat, the instrument to push an idle asset to move from the productive. Why the central bank now lower interest rate until to zero, like the Fed, the Europe, and the Japan, because they want to push the idle money from the bank to go the real sector. It's mean that obligation of zakat not only 2.5 obligation, but to move to the holder, the investor, to move the idle asset, go to their ensuring the productive activities. So the obligation of zakat, there is a role ensuring the need of the poor, of course. So the zakat is support the government social protection program to overcome the social impact of the COVID-19. So this is the complement. Yesterday, Excellency Ibu Sri Mulyani talking about the cash transfer to the poor people. So the zakat also the same thing. But maybe the challenge of the zakat in Indonesia about the government, the governance, and then of course the transparency. Of course, we try to make why the potential zakat can be fulfilled not only in the 15 trillion or until 20 trillion, but can do more. And then the second one for the economic activity is the prohibition of interest-based and speculative-based activity in financial sector. Of course, because this is the preventing misallocation and encouraging productive activities, profit and loss sharing, risk-sharing, and other type of their financing. And the last one, halal economy. We're talking halal economy product and conduct. Now we're talking about the green, the impact. We're talking about the green economy, socially and environmentally friendly. So there is the connecting between the Islamic economic and implication. And how the economic role? We're talking about economic role. It's talking about the obligation of zakah. Zakah is to provide, to maintain the purchasing power that the people still can consume. This is the engine of the economic growth. The consumption is the engine of the economic growth in Indonesia now, because more than 60% the engine of the economy come from the consumption of the private. So how the impact on the COVID can be maintained when the government gave the social protection program, and also the zakah is in the role how the duafa consumption still protecting that. So to keep the demand side access and the role of the zakat. And the second one also, how the role the charity fund, in fact, wakaf, also we try to wakaf the role to in social investment. And also from the SME microfinance. So if we're talking about Islamic social finance, can be role in both from the demand side and supply side. And then, of course, if talking about the halal economy, talking about the halal industry now, halal value chain, talking about the halal food, talking about the tourism, talking about the modest fashion now, Indonesia is growing because the people, and then this is the big challenge for that. And then the position Indonesia in the global is very, very proud for that. And then the objective, of course, the whole economic role, of course, encouraging economic growth through demand and supply sector. So the Islamic finance can be maintained about two sides, the demand and the supply sector. And of course, we already know that the zakat reducing the unemployment and promoting equality, because the profit and loss sharing, resharing, and also the reducing unemployment. And then promote financial stability, yeah, of course, because we don't want to avoid the risk. Talking about the Islamic finance, not avoid the risk, but accepted the risk. Because we are risk sharing, because profit and loss sharing, so we accepted the sharing. So the financial stability more quite managed. And then the second one, the halal industry, because we're talking about the green economy, so the sustainable development it will be accessed. What Indonesia experience, we have, if we're talking about the social finance, why we concerned about the social finance? Because Indonesia, the most populated Muslim, and then more than 250 million Muslim Indonesia has the potential how to mobilize the social finance in Indonesia. Private institution, we have more than 700 Islamic social fund institution. And then the government, maybe later on, I will explain more detail about cash wakaf link suku, that is the blended, this is the creative, this is, maybe a little bit, this is one of legacy Indonesia to give the blended fund integrated between the social Islamic fund and the commercial Islamic fund. Talking about the SME, social medium enterprise and microfinance, we have 4,000 Islamic microfinance institution, BMT, and then Bank Wakaf Mikro, now developed by Ojk and other. And then the other, the commercial finance. So if we're talking about the holistic, it's talking about the ecosystem, why the Islamic economic principle and its implication in the role of economic, so we can put in the letter and put to be one of a complement strategy by the economic Sharia. One not only this is part also part of government policy to support about the economic recovery in Indonesia. Next slide. How the inclusion. This is the journey. Talking about Islamic finance can facilitate real sector activities inclusively in all scale. Because if we try to make some comparison between Islamic finance and Islamic economy, of course, in the low scale, mustahik is of course the beneficiary of zakat, the poor level, it call maybe in this people, in this group, in the skill, in this group, it is their income is not enough to consume. So that's why it should be rescuing for the social inclusion. Then they can reach a financial inclusion, still social inclusion. And then the second one, to scale up from the mustahik to small enterprise. Of course, there should be intervention. Intervention what? Intervention about the Islamic finance. What is Islamic finance? Islamic finance is in the social Islamic finance. It's not directly the commercial finance, because the commercial finance cannot reach about the lowest society in the poor mustahik level. And then the second one, after we know the financial inclusion, small enterprise, maybe the commercial can also cannot reach upon the small enterprise. So that's why the role of the Islamic finance can be more and more a role in this level. from the rescuing and then the strengthening about the society. But after the medium enterprise and then corporation, of course, the commercial financing can be financed about the Islamic economy and the scale. So the scale up from the mustahik, small enterprises, medium enterprises, corporation should be scaled up by one, and also the finance also should be not inclusively by only commercial financing. But commercial financing can be blended with the microfinance and social finance to be more effective how to finance from the lowest, the medium level until the cross inclusion. So it means that Islamic finance facilitates real sector activities inclusively in all scale, and Islamic social finance also serve as an alternative source of financing, and holistic inclusion is attainable. So this is why it's hard if the commercial financing should be goes to the lowest level, maybe hard for that. Next slide. Maybe I will try to, maybe next slide, because this is time. So if we're talking about the Islamic social and the finance system, of course, we know the commercial there, maybe in the previous section was already explained from my colleague from OJK, how the performance of the bank, non-bank financial, capital market, of course, and then the fiscal, of course, the role of the suku and tax, and then the social finance, wakaf and zakat. But we know that the commercial goes to the high income society and of infrastructure. Government also goes to the infrastructure, can also fund the low income society, and Islamic social finance can go to the low income society for the zakat, the function of zakat, and also go to the infrastructure financing. It means that the production and consumption in the real economy can be drawn by the role of the commercial, fiscal, and social is the blended for that. Next slide. That's why maybe some of the participants have already know that cash wakaf suku, why this is the most structural reform in Islamic finance, because this is the blended fund. Blended fund, we blended from the Islamic social finance and the commercial finance. Of course, this is the private placement, the first cash wakaf suku, maybe in the inclusiveness is maybe little not more, because this is private placement. But this is the very, very creative, and maybe I thought that this the challenge for us, why the social finance, Islamic social finance can be blended and then can be structured by the commercial, because suku is commercial and then wakaf is social, because this is the cash wakaf, temporary wakaf. And then we can so invest the secure from the initial, because the Nadir has invested securely in the government bond, and then suku wakaf, and then after that we can return to not pay back to the wakaf, but goes to the a specific project, hospital in Banten and something. So that's it. One of maybe it is one of the legacy Indonesia, that collaboration between Bank Indonesia and then the Awqaf board, BWI, and the Minister of Finance and other stakeholder, how to make this be more role in how to cope in Indonesia. Next slide. The next cash wakaf suku in retail, there is more inclusive. The previous one is private placement. Now we attract about the Islamic bank is the distribution unit to attract. So all the people society, it is the personality. So in the retail, the fund from the retail, and then placement for still in the government suku wakaf. So it more the inclusive, and the project more spread out. So many projects inclusively the fund from the society, and also the impact of the fund, Islamic social fund, goes to the some prosperity, some project prosperity. So that's this is a challenge also. So the literacy should be addressed for that, and then we still in pipeline for the team of the Minister of Finance, how to make some cash wakaf suku retail will be more familiar in Indonesia. So most the Islamic finance contribution, Islamic social finance blended with the commercial finance can be contribute from the economic scale in Indonesia. So last thing, maybe the conclusion, because the time is limited. The last, my conclusion may be the Sharia economy and financial development is part of Indonesian economic structural reform in achieving sustainable inclusive growth toward the vision of Indonesia Maju, of course. And the Islamic finance facility real sector activity inclusively in all scale that I state that during the low scale until the upscale, where Islam social finance serves as alternative source of finance and attaining holistic inclusion for sustainable long-term growth. And the last, ecosystem development approach with close synergy between various parties will optimize the development of Sharia economy and finance. Again, thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you very much, Pak Anwar. It's very, very enlightening and very interesting, and as well as so promising, this commercial Islamic financing, especially the blended financing that you already elaborated. I think we have so much hope for the contribution of the Islamic financing to the sustainable and inclusive growth. Allow me to continue with the next speaker. I would like to invite Bapak Sani Muhammad Ismail. How are you, Pak? Been quite a while not meeting you.
Fine, thank you, Bu Titik.
Pak Sani Ismail is the principal financial sector specialist at the Asian Development Bank. I've known Pak Sani quite a while. He knows a lot, and we are going to learn from him about how the Islamic finance as a window of opportunity in addressing sustainable and inclusive growth through economic recovery. Time is yours, Pak Sani. If possible, 15 minutes. Thank you.
Let me just start my stopwatch, so I have 15 minutes. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Selamat siang semuanya. Very nice to see you, Ibu Titik. Always a pleasure to have you and to have you moderate the session. Also to my distinguished speaker, Professor Dian, Bapak Anwar from Bank Indonesia. Very nice to meet you in this session. So in this presentation, I would like to discuss the opportunity and the intersection between Islamic finance and sustainable finance, particularly for the purpose of inclusive growth and economic recovery. Can we go to the next slide, please, just to see the overview of the presentation? As I've mentioned, broadly speaking, I will be looking at the current state of sustainable finance globally, international experience, the context of Indonesia and the government strategy, and then we move towards Islamic finance and the convergence with sustainable finance. I think this is a very interesting area. Of course, we will look at the perspective of the capital market, because I think when we talk of economic recovery, it's all about financing. How can the government raise financing for recovery? And Green Sukuk has been an interesting example. But then we will move to look at new instruments for sustainable finance and opportunities for Islamic finance, because generally speaking, I think sustainable finance have moved ahead, which provides the opportunity for Islamic finance. Next slide, please. Briefly, just looking at this diagram, this graph, we see the current state of sustainable finance, and two things jump out at you. First is the significant increase in terms of global sustainable debt annual issuance. If you look at 2013 to 2020, significant increase, more than 2,600% increase. The other thing you will notice from this graph is that the number of instruments have also increased over the years, particularly when you look at 2019 and 2020, there are new instruments such as sustainability-linked bonds and sustainability-linked loans. These things I will discuss later in the latter part of my presentation. Next slide, please. Just to give you a flavor, again, we're still talking about sustainable finance, looking at the different markets in the ASEAN region, ASEAN +3. So we know the People's Republic of China, or PRC, dominates the outstanding stock of green bonds. Interestingly, Republic of Korea has over 50% of social bonds outstanding. So they are a lead proponent in terms of social bonds. In terms of the ASEAN market, the ASEAN countries, Indonesia included, 16% of sustainability bond stock. So it's a growing market, a growing area, and a growing opportunity, I would say. Next slide, please. This slide shows you some international practice. I won't go into detail, just to highlight 2 points that if you compare and contrast, for instance, the European and the American market in terms of sustainable finance, they are both quite developed, but the dynamic is quite different, I would say. In the European market, for example, it has been a champion, a leader in sustainable finance, and it's very much driven by the European Commission, the European Union. We know that they have taken the lead in terms of the Green Deal, in terms of the European taxonomy, the first taxonomy in terms of green and sustainable finance. So it's very much supply driven, active involvement of the government and the policymakers. In America, on the other hand, although I would say, I would put a caveat on this, but in the beginning, at least in America, it has been more demand driven, demand from the investors, demand from bottoms up, if you like. And we see this through a lot of the requirements in terms of disclosure, as well as sustainability reporting or ESG reporting and ESG investment. So the government initially played less of a role in terms of promoting sustainable finance. But of course, with the incoming or not incoming anymore, I guess you can say with the Biden administration, this has been taken up more seriously, and we foresee the government playing a more active role in this space. Next slide, please. In the context of Indonesia, we know that Indonesia is a tropical and archipelagic landscape, meaning it is, vulnerable in terms of natural disasters as well as impact from climate. And we know a lot of incidents that has happened. I guess in the year 2021, we know Cyclone Seroja hit both Nusa Tenggara and caused loss of around 200 lives and I think around $250 million worth of economic loss, at least based on the estimate of the National Disaster Board. The government of Indonesia spends approximately 300 to 500 million annually on post-disaster reconstruction. So it's a quite high amount in terms of the impact on Indonesia as well as the cost for recovery. Next slide, please. The government has a good strategy in terms of green finance framework. Obviously, we know that the government has ratified the Paris Agreement, has made commitment, the NDC, 29% unconditional, up to 40% with international support. I think this is a key part that Ibu Sri Mulyani will always mention in the speeches, that we need international support to meet these targets. And the term just and affordable transition is very important. Indonesia also has climate budget tagging, which is a very important part. When you want to talk about issuance of capital market instruments, it's very important that you have climate budget tagging, because that can be the basis for your underlying instruments for bonds or sukuk. Next slide, please. Now, looking at the environment in terms of Islam and Sharia, I think it's quite clear that it is very much part of our usul al-fiqh in terms of Islamic jurisprudence, whether that be in the Quran, in the Hadith, and these are just some of the examples that you can see in terms of the reference to the importance of the environment as part of our religious duty, at the very least as a fardu kifayah. So you can see in Surah Al-Baqarah, for example, in the Al-Quran, it says, eat and drink from the provision of Allah and do not commit abuse on the earth, spreading corruption. So there are many verses in the Quran and many instances in Hadith which talks about the importance of environment, the importance of social support, the importance of helping the poor, reducing poverty, and so forth. So in other words, there is a good basis for when we talk of social finance or environmental finance, green finance. It is not just a commercial instrument, but there's a basis in our own religion, in Islam itself. Next slide, please. This is a very interesting study done in the Islamic Finance ESG Outlook 2019. I thought it was very interesting, and I'd like to share it with you, with the audience. It shows here that in terms of ESG of course stands for environment, social, and governance. It's quite a terminology widely used. Very interesting to note that Sharia compliant companies globally, both non-financial and financial companies, actually do perform better compared to non-Sharia compliant companies. If you look at the scores there for the financial companies, global, Sharia compliant companies score around 52.3 compared to 49.4 for non-Sharia compliant. Now, looking to the right-hand side, you will see the non-financial companies. Again, Sharia compliant companies perform better significantly better, I would say, 52.3 overall score compared to 47.5 for non-Sharia compliant companies. So what does this tell us? This tells us that there is indeed a strong convergence between ESG, environment, social governance, and Sharia, Maqasid Sharia, in terms of the objectives of Sharia. And so when there is a strong convergence, when there is an intersection, I think there's a tremendous opportunity for Islamic finance to be looked at not just as a religious angle, religious duty, or religious obligation, but from a broader context in terms of social, green, economic recovery, and of course, ultimately the Sustainable Development Goals, SDGs 2030. Can we go to the next slide, please? I think we can skip this slide. Next slide, please. Just in terms of sovereign issuances in Indonesia, we know that Indonesia was the first to issue sovereign green sukuk in 2018, approximately US 1.25 billion. This was followed up with issuances in 2019 and 2020. And we've heard a couple of times the mention of the issuance in 2021 with the longest tenure of 30 years. I think also approximately USD $750 million. So Indonesia's government has actually done a lot in terms of promoting green sukuk as an instrument to raise financing for domestic revenue mobilization for the purpose of for the purpose of environmental and green purposes. In fact, we can say that Indonesia is one of the leading countries in the area of green sukuk. Next slide, please. Next. And on the retail level, we also have green sukuk tabungan. And just now, we also heard from Pak Anwar in terms of cash wakaf link sukuk, how it can be used for retail purposes, as a retail investment. So these are all interesting opportunities, interesting innovation that Indonesia has introduced to the world, I would say, in terms of using green sukuk from an Islamic finance perspective, green from an environmental perspective, and connecting that to retail investors. Next slide, please. Now, if we move beyond green sukuk, and I like to focus more on the capital market, because as we've heard earlier, in terms of Islamic finance, the capital market has actually the larger portion of the asset in terms of Islamic finance. Of course, in conventional finance is the banking side that dominates Indonesia's financial sector. Now, if we look at innovative financial instruments for sustainable finance beyond green sukuk, beyond social sukuk or social bonds, you see some interesting new innovation being introduced. One is, of course, transition bonds. I think that's interesting because that looks at moving beyond the model of use of proceed, which is very typical for green sukuk, green bonds, instead looking at how we can help companies with high emission to transition towards a cleaner pathway, a greener pathway. And this can be, for instance, for the energy companies, for transportation companies, they can look at the opportunities in terms of transition bonds or transition sukuk, which will be very interesting, I think. The other new innovation is sustainability-linked bonds, and certainly there is an opportunity for sustainability-linked sukuk, as I will discuss briefly. This is a very interesting and innovative instrument in the capital market, because what it does is it adds a reward penalty mechanism that can be added as a step up for extra payment if the certain KPIs or key performing indicators are not met. So what that means is that the issuer, it can be sovereign, it can be corporate, agrees upfront that these are the indicators that we would like to meet in terms of how the financing will be used. And then the investors agree that, okay, if you are able to meet these KPIs, these indicators, then we will lower the yield that we will receive. So it acts as an incentive for the issuer to be able to raise capital, but also to meet the indicators. On the other hand, if the issuers are not able to meet the key performance indicators agreed, then they may actually have to pay more. That's why we say step up or extra payment upon maturity. So there's a reward and penalty mechanism in this sustainability-linked bonds. And actually, it has been tried in Malaysia based on, if you look at the contract, it's based on Wakalah bi al-Istismar. And there is an example, Suku Ihsan, which was issued in Malaysia already. Although I will say that this is the structure in the Suku Ihsan. You can see it's actually quite a traditional structure in terms of the Suku using the underlying contract, with Khazanah playing the role of wakil or obligor. The interesting part is, of course, as I mentioned, is the reward incentive penalty mechanism, which acts as an incentive for the issuer to meet the KPIs. The one thing I will say about Suku Ihsan in Malaysia is that it was innovative, it was interesting, it was something new, but I will also say that in my own personal observation, that the KPIs, the key performance indicator that was agreed, was not sufficiently clear. In this case, it was in the case of, I think it was used, the funds was to be used for education purposes for Yayasan Amar, if I'm not mistaken, which is basically to boost education for the poor. But the KPIs that were agreed were not very clear cut. For instance, it was to improve the teaching quality, to improve the performance of the students. I would recommend, if we were to use sustainability linked Suku, such as Suku Ihsan, we need to come up with clearer KPIs. And I can see the potential, the opportunities. For instance, if the government of Indonesia would like to raise more capital during the pandemic, because we know that there is clear need for financing, for social assistance, for PKH, for Kartu Sembako. So there is a need to provide support to the people, because we know there's a trade-off between mobility and economic hardship. Then you can think of KPIs such as the number of people that are provided assistance, social assistance program, the coverage. So the government can agree with the investors that if we can meet certain thresholds, certain targets in terms of social assistance program, then the cost of issuance will be lower. On the other hand, of course, if you don't meet the targets, then the cost of issuance will be higher. The yield paid by the government will be higher. You can also use sustainability-linked Suku for vaccination. For instance, if the government needs more capital, more financing for vaccination, you can have certain targets. If you can meet certain threshold for vaccination, and this can be either nationally or by region, then again, the yield being paid by the government can be lower. And otherwise, you can also have a penalty mechanism. And this is fully in line with Sharia, because you can have the investors, for instance, foregoing certain portion of the payment of the yield through hibah, which is certainly in line with Sharia principles. Can we go to the next slide, please?
Yeah.
Yes, Ibu Titik. I guess my time is coming out. Just some concluding thoughts. So yes, in terms of the environment, we need collaborative effort to meet commitment in the Paris Agreement. We know that. In terms of economic recovery, certainly there's an important role to be played in terms of the recovery of the economy, helping the poor, helping the vulnerable to recover through social assistance programs. The need for financing is significant. If we were to meet SDG goals 2030, yes, certainly exceeded $1 trillion US. Therefore, there's a significant role for Islamic finance to play. In addition to Suku, as we've discussed earlier, there's also a role for productive zakat, wakaf, and Islamic microfinance. These are other opportunities for where there's a convergence between Islamic finance, social finance, as well as economic recovery. I would say that the government of Indonesia has set the tone in terms of green Suku issuance. For instance, there's a role for the corporates, and we can look at fiscal and non-fiscal incentives for the corporates to be more involved in social finance and Islamic social finance. Finally, just a note that Islamic financial institutions that do not move towards ESG are taking on additional risk with no compensation. So I think over the medium term, the trend is clearly towards ESG and social finance, and both issuers and investors are highly encouraged to move towards this, not just from a social perspective, from an environmental perspective, but also from a profit making perspective, because otherwise they are taking on risk such as stranded assets and so forth. And I'll be happy to discuss this in further detail subsequently. I think that brings me to the end of the presentation. This slide is just something for discussion later on. I'll end my presentation there, Ibu Titik. Thank you very much for the opportunity. Thank you to the organizer for inviting myself and ADB for this event. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Allow me to mute a while because at my side, azan. Thank you for the patience. Apologize, Professor Mahmud Mohildin. We are now looking forward for your thoughts. Please let me introduce Professor Mahmud Mohildin. He is the Executive Director for Arab Republic of Egypt International Monetary Fund. Dr. Mohildin is an economist with more than 30 years of experience in international finance and development. He has been a United Nations Special Envoy on financing the 2030 Development Agenda since February 2020. We are very, very lucky to have you in this conference. Professor Mohildin also served as several boards of directors in the Central Bank of Egypt and the corporate sectors. He holds his PhD in economics from the University of Warwick, United Kingdom. Without further ado, Professor Mohildin, the time is yours. We still can hear you. Organizer, can you help?
Is it better now? Can you hear me now?
Yes, yes, loud and clear. Please.
Right. Very good. Thank you so much. And well, I promise that I will not take long. And first of all, Assalamu alaikum wa rahmatullah. I'd just like to express my gratitude for the kind invitation and the generous introduction. Very pleased, of course, to join this distinguished panel with Professor Diane Masjida and the Mr. Anwar Bashuri and Mr. Ismail. I learned a lot from the presentation, especially on the innovation side. Been following what's happening in Indonesia for many years, thanks to my good sister and friend, and we shared the same floor at the World Bank, the 12th floor for many years. Her Excellency Sri Mulyani Indurwati. I admire her work, especially on the innovation side, and I found the issues related to blended finance and linking cash to sukuk to waqf is very innovative. I listened carefully as well to some other innovative instruments that could be replicated, including the sustainability linked bonds or sukuk. We know, of course, that there are a variety of colorful bonds now, including the SDG linked sukuk, but I like the incentive structure that was shared. I think at this stage, yes, I have a presentation to share with you, but more important than the presentation, just trying to complement what was mentioned before me through the important interventions. And one of the fundamental matters, before we get into the slides, that Islamic finance is not finance for finance. It's finance for substance, finance with underlying value, with an underlying asset. So the argument that Islamic finance can do well in promoting sustainable development comes naturally. As I've been mentioning before, those who are working in Islamic finance do not really need to stretch any muscles or to go beyond their mandate, because the social impact is embedded, the underlying assets should be there, and contributing to the welfare of the society at large is very much part of the framework. In the past, I think the emphasis was very much about what Islamic finance is prohibiting, but it's more now about, in addition, of course, to the prohibited areas of funding that really fall today in common sense and ethical values as well, beyond the thinking of linking it just to Islamic finance. But the other thing about innovation and how can we provide solutions. And in today's world, and let me just be very clear, I've been following the SDGs, as some of you know, and I've been in the introduction since the inception of the SDGs. We cannot blame the failure to achieve the SDGs and being off track in many countries on COVID-19, because even before COVID, there was very big question marks about the ability of many countries to achieve the SDGs. Some countries did well, some countries were very much off track, as it happened exactly during the less ambitious targets of the MDGs. But we still have around 10 years or less left, and anything that we can do on improving the evidence, enhancing finance, and doing better in the implementation is going to be very much helpful. So this is the first part that I need really to emphasize. How can Islamic finance provide solutions? And here I think the issue is not about having some transactions. It's basically about a system and about a policy and about an approach. Transactions come next. And as we have seen, there are lots of good innovative solutions. So I'm not really short of ideas when it comes to designing some particular products. But what we are short of, perhaps globally, not just in the members of the OIC countries, it's basically how can we really put the framework that can be sustainable, that can be smart, not just to have a green sukuk, but basically how to green the financial system and how to green the economy. Not just about digitalizing the means to deal with some of the financial instruments, but basically how a smart economy working for the benefit of the society could be pushed, and the Islamic finance here could be an element of this support, because without finance, nothing would happen. We can just talk about dreams. As we speak, when the IMF released its figures of growth of around 6% for the world, we knew that there would be a great deal of discrepancy, uneven growth. Some countries are going to be growing at 6% and more, and some countries are going to be growing by less than 6%. And I'll show you a figure now, a chart now, because the OIC member countries are not doing very well on that front. Yes, China is going to be growing by more than 6%. The US definitely is going to be growing for the first time in many, many years by more than 6%. But we need really to see the performance of the OIC countries. So there was decoupling and there was divergence and great deal of unevenness in the growth front. And without growth, again, you cannot really achieve the SDGs, because they are very much demanding to inclusive growth that could really create opportunities for jobs. Then During the last few weeks globally, and we wish and pray for the safety of everyone, three things happened, and the three things were not really very good. First, a shock because of that new Delta virus that is affecting many countries, including the US. Now it's almost 1:15 a.m. In the US. Been getting news about the increase of the numbers of those who have been affected by the Delta virus. The other thing is that we have seen signs of the impact of climate change on severe weather changes and disasters in many countries, including in Asia and more recently in Europe. And this is something is reminding us of what we should be doing on climate change within sustainability framework. At the end of the day, climate change is SDG 13. And the last thing is basically the kind of disruptions in the supply chain. And that's why you see problems getting some of the essentials traded in many countries because supply chain is disrupted. Some essential components and inputs are not there, including for the vaccine. So when we say that, we don't need just to stop at the problem. How finance, based on Islamic principles, based on ethics, could help on that? Can we provide funding in terms of Islamic social finance for those who are working on vaccine in the health sector? What's the role of Islamic finance on sustainability and climate change? What we can be doing different and better in the investments, in adaptation and mitigation, and in managing the transition, especially for the countries that are dependent more on extractives. When it comes to supply side issues on supply chain, how can we be providing solutions to that? So I meant to mention that because the previous speakers did a fantastic job in providing an overall perspective on finance, the transactions, some of the new products. But I felt that that it was not even on my presentation, but I wanted just to share with you these issues because we need to put Islamic finance to be part of the solution. Part of the solution when it comes to debt, because many countries are suffering from debt accumulation and budget deficits. Islamic finance needs really to provide some solution to combating illicit financial flows. Islamic finance definitely is against these kind of illicit transactions. And how Islamic finance can provide decent, sustainable investment with impact by having bigger scale of all of what we heard from the previous speakers. So very quickly on those slides, to be super fast, just a reminder of what's happening in the field. Next slide, please. Yeah, there's just about the growth, and as you can see here, that the latest figures we have are still at 2019, when we have seen a growth by around 11 to 12%. It is expected that Islamic finance assets to continue to grow, and that growth is going to be in the single digit, but it's going to be decent growth given the circumstances. And we might be seeing Islamic finance in terms of the assets accumulated to be exceeding $3.5 trillion. Next, please. Of that, you can really see the dominance of banking assets and the growing importance of sukuk. And then takaful needs a push, and other funds, including innovative funds and funds supporting the startups and for crowd finance, need more support. But this is still stopping at 2019. With my colleagues, we try to find the latest, and the latest really reports coming from all of the normal sources of funds based on Islamic principles are not really getting us actuals beyond 2019. And this is something that we need to work on. Some countries, including, of course, in Indonesia, our host today, we have up-to-date figures until yesterday. But in order to have a global figure, you need all countries to contribute to these updates. course, last year, everybody was busy with something else, perhaps. Next, please. And you can really see that Sukuk was basically gaining some momentum, including the new issuance in billions of dollars, and the reopening as well have been on the growth side of the story as well, positive growth. Next, please. And the foreign currency, here you can receive the good reference to the big players. We see now higher growth in Indonesia. Egypt, my home country, just blessed a law a few days ago to allow for sovereign sukuk. So you would expect Egypt to be coming strong in this market as well. In addition to the long-standing players in the field, Malaysia, Saudi Arabia, United Arab Emirates, Bahrain, and of course, with the kind of interest we see now in the sukuk business in Indonesia, we're expecting more of that. Next, please. And then the issue here is basically about the expectation for this year. I think it's going to be matching what happened last year in terms of the sukuk issuance, but this is just a projection. Next, please. And here these are just the list of the 10 biggest issuers. One thing here, and we need really to learn not just from innovation. I mentioned already my admiration to lots of the good ideas coming from Indonesia on the blended finance and this issue of incentives linking it to sustainability. But actually, I'm expecting after the default case of one issuer, that is going to be a good reminder that this is still a market with risk. Yes, based on Islamic principles, but is not risk-free. And matters related to default need really to be considered, including the issues related to resolutions and protection of the different parties involved in the sukuk contracts. Next, please. Yes, here we come to this issue that was raised several times about growth. As I said, growth in the world is going to be around 6% for this year. Next year is expected to be around 5%. But as you can really see here, there is a great deal of discrepancy across regions. So advanced economies and big emerging markets economies are doing better than the low-income countries and the low-middle-income countries. I'll show you more when we get into that figure of growth per countries. Next, please. Yeah, if we can go to the growth one, and then I'll go back to the SDRs because that is mislocated. If you can go to the next slide, please, and I'll go back to the SDR issue. Yes, just to continue with the growth story. On the countries on the red are basically the countries, the member countries of OIC, which did not reach the average growth rate of the world in that particular year. So in the year 2020, the world average was -3.2, and you can see a good number of the OIC member countries were below that figure, worse than 3.2. This year, growth is expected to be 6%, and we see more countries are on the red, i.e., even if they are growing positively, but their positive growth is less than that of the global average. This has something to do with the initial conditions, with the fact of the vulnerability of many of the members of the OIC countries, and then, of course, the issues related to the stimulus packages. Advanced economies managed to inject as much as 28% of their GDP into the economy. The low-income countries, less than 2%, and the middle income countries ranging between 6 to 8%. So the figure here are not really a surprise, because the majority of the OIC countries, with few exceptions, yes, of course, we have a couple of G20 countries like Indonesia and Saudi Arabia members in the G20, and we have some other countries with high income like Emirates and Kuwait and others, but the majority of the OIC countries are low income and middle income countries, and they have been very much vulnerable, as we heard from colleagues earlier, to the shocks associated with COVID-19. So let's go to the slide that I skipped fast on the SDRs, the special drawing rights. If you can go back, yes, go back again. Yes, go back. Yes, this one. Everybody, I think, have heard already of the SDR, the special drawing rights. And this is just fresh news, because day before yesterday, they were issued. Every country had a share, which is 95% of its quota. $650 billion have been distributed to all members. And then you can really see that countries have got a decent figure. You can really see here, for instance, Indonesia is getting in US dollar around $6.3 billion added to its international reserves. But to compare the OIC countries, I know it's hard to read from a distance, even for me here, but I'll leave these slides with you. Some countries say...
Excuse me, Prof.
Yes.
The organizer remind us to conclude your presentation in 3 minutes. Is it possible?
Yeah, of course. In the case of the USA, you see that their share of the SDRs is 112 billion. The whole Africa is around 35 billion. So this issue of divergence and discrepancy need really to be considered when we're talking about finance and financial transactions. So next slide, please. Next one. Yes. This one is just, this colorful slide is about the SDGs. Ranking of SDGs, an important report that you need to refer to in order to consider what we should be doing, because the majority of the countries of the OIC are not on the green. If you are in the green, this means that you are among the top 50 in the world. If you are not on the green, this either like in blue, this between 50 and 100, and then yellow, you are between 100 and 150. So a lot of work is required for the OIC member countries. Next, please. And that will be finished within 90 seconds. This slide is just summarizing my introduction, that you need to put transactions within institutional policy framework in order to achieve the SDGs. It's not enough to talk about transactions. Next slide, please. And this, again, what I said about the links between Islamic finance and the links with financial inclusion and funding infrastructure with social impact. And there are a couple of references here for those who are interested to go further on some background material. Next, please. And with what I heard now of the advances that Indonesia have on the scope structures, it's just giving you variety of structure. This is the simplest of them. This is a sukuk for infrastructure investment. Next. And this one is much more complicated. This is basically for long-term development finance with the whole structure of the capital market. Then I have a couple of examples on istisna and ijara. Next, please. Next slide, please. Yeah, this is on the one for long-term development finance based on ijara, and the following one, and the last one. Next, please. Yes, this one is another example on wakala contracts. And that's just to tell you that solutions are there, the technical solutions are there for those who want them, but we need to put them within the overall policy framework and the good regulatory structure, given that the possibilities of default, especially if your structure is more complex. And the final slide. Yes. We need to keep that as the target, achieving the SDGs to end poverty, to achieve shared prosperity, greening the economy with social and economic development within good governance structure and partnership. Thank you so much. It has been a pleasure.
Thank you very much, Professor Mohildin. Thank you very much for participants and all the speakers that are patiently with us today. To the organizer, can I have another 10 minutes to address the questions from the participants? We overrun by 7 minutes already. Is it okay? Right. So, distinguished presenters, we received several questions. Several questions convert into the question about Indonesia. What is the biggest challenge for Islamic financing in Indonesia? Particularly the Islamic banking, why is not that popular? Maybe I invite Pak Anwar and Ibu Dian to answer that question. We also received another questions on the possibility of a retail benevolent sukuk or Qardah-based sukuk without any benefit for social investor, aiming for digital, non-digital job creation project. Is it possible? I wonder whether Pak Sani or Professor Mohildin would like to answer that question. I also invite everyone to answer the question. And the third question is that the condition of the COVID-19 pandemic had made all business experience a slowdown, including the Islamic banking. Please suggest what to do in order to maintain the existence of Islamic banking so that banks can continue to expand in the midst of the COVID-19. Maybe particularly to Pak Anwar, there is one question, Pak. As we know that Indonesia is the best country in World Giving Index, how to maintain this advantage to improve Islamic finance like crowdfunding, sukuk, etc. to give more chance to suit and sufficient for APBN. Because of the time constraint, I would like to allocate 2 minutes each for the speakers to respond to any questions they would like to respond. Thank you. Start from Professor Dian Masita, please.
Okay, thank you very much, Dr. Titi Anas. Regarding the first question, how about the Islamic banking is still low? There are many research to show this concern. Researchers found that service accessibility, easiness, information technology-based product knowledge, the main concern for the customers. Religious factors is very interesting. Religious factors is not significant driver to shift from the conventional to the Sharia. And government and private sector support the important determinants. Then we have a big challenge here to develop Sharia banking. We have maybe challenging in regulatory framework. Islamic banking requires favorable government policies and regulation and positive effect on Islamic banking. Government's policy to expand and market share in Islamic banking is one of the priority. And the next challenge is like qualified human resources. Human resources in Islamic banking should be knowledgeable both law, Islamic law, and also economics. It's not easy. Provided qualified human resources needs specialized in education institution concerning Islamic finance. We already started from 10 years ago. The next challenging is lack of awareness of Islamic banking, even in Muslim community. They have less understanding about the term, product, and also Islamic principles about Islamic economic and banking. So I think this is my answer for the question. Thank you.
Thank you, Prof. Dian. Pak Anwar.
Thank you, Dr. Titi. Maybe we agree that talking about Islamic finance can be contribute to the growth, more sustainable and also more inclusive. Yeah, we agree for that. But the challenges, of course, we divided too. From the Islamic social finance, of course, the potential is a huge. The huge Indonesia about the Aifc or the zakat. But the challenges about the governance, transparency, and also the accountability. So the information system, and then also the integration, the legal basis should be one of the challenges in Indonesia. So the potential is only can be implemented because we have to literacy, to increasing the literacy, because not all the people know that if we want to donate the voluntary of the Aifc, zakat, is only for the inshallah for the next level, not for the economy. So why we too important to know the literacy. And then the second one, from the commercial finance, also the most important. Like now this is the pipeline. Maybe yesterday Excellency Ibu Sri Mulyani has pointed out that now there is a reform in the pipeline about in the omnibus law, that the commercial finance, the uniqueness of the core business, Islamic finance, the commercial finance should be in front. And then the second one about the same playing field, and then the legal basis. Because if we combine both of them, so we can feel the scale of the economy to be financed, not to the same thing. So the uniqueness, the playing field, something, and then the literacy. So both of them, in the literacy and also how to make some uniqueness, and then the sampling playing field, and also the governance, the transparency and accountability between the Islamic social finance and the commercial can fill the gap. And of course, the contribution to the economy, every skill can be do more. I think that's all, Bu Titi. Makasih.
Thank you, Pak Anwar. Pak Sani, would you like to address those questions? Any questions that you would like to address? Thanks.
Thank you, Ibu Titi. Maybe I start with the first question and then I try to answer the second question. Not super clear on the second question, but I'll try anyway. So on the first question, in terms of Indonesia, Islamic finance, Islamic banking, for me, there are two key constraints. One, I think, as discussed by Pak Anwar and Prof. Dian, on literacy. If we look at the literacy in comparing conventional and Islamic, there's still a gap. I mean, even the conventional finance, it's not great, but it's even lower if you look at Islamic finance. So clearly what that tells me is that there is, the masyarakat, the population, the society has not seen the value add of Islamic finance or Islamic banking. If they were to see Islamic banking just as any other conventional banking, then the question will be, why should they go toward Islamic banking? Is it just for Jannatul Firdaus, just as a religious duty? I think that's not enough of value proposition. We need to demonstrate what is so special about Islamic banking, Islamic finance. The second thing, reflecting on Malaysia's experience, if we look at how Malaysia has done quite well in terms of Islamic finance, I would say there's a coordinated effort in terms of pulling everyone together to develop Islamic finance. And I would give a lot of credit to former Governor Zeti from Bank Negara Malaysia. She was clearly the figurehead of Islamic finance development in Malaysia, 15, 20 years ago. She was able not only to lead Bank Negara, but to bring in together Ministry of Finance, Securities Commission, all the other agencies together. Unfortunately, just my observation, and I stand corrected, when I look at Indonesia, I see a lot of potential, but I don't see that kind of strong leadership, someone to pull everyone together and to say, let's do it. Indonesia bisa, Indonesia boleh. Let's bring everyone together. So that coordination, we always say in Indonesia, yang paling mahal sekali koordinasi. Koordinasi yang paling mahal sekali. So I think that is probably lacking a little bit in Indonesia. On the second question, briefly, Ibu Titik, I think, in terms of if you want to look at Sukuk as a form of investment for the investors, I think it's very important to see the social dimension. We know that sukuk can be used for business, for transaction, but the new evolution is to demonstrate how sukuk can play a role not just from a financing perspective, but also in meeting some of the social indicators that I discussed earlier in my presentation. I'll stop there, Ibu Titik. Thank you very much for the opportunity.
Thank you so much, Pak Sani. Professor Muhyiddin, would you like to address any questions from the audience? Thank you.
Very briefly, an observation and a suggestion. If I'm taking an observation from the discussion, that Indonesia, with what I heard, could be very much a hub of new ideas and innovation in Islamic finance. But that needs what was just mentioned, depth in research and development. What was rightly mentioned about Governor Zeki, that she didn't just lead by example on the regulatory side, but some of the biggest research departments associated with Islamic financial institutions were based there. Ideas not limited to banking, but even to takaful and other aspects of finance, and that's very much important. The other thing here, that it's not just Islamic banks are getting a challenge. It's not from the conventional banks anymore. It's every conventional old financial intermediary with the digitalization today are subject to this kind of disruption, conventional, Islamic or otherwise. And here there is an advantage from the Islamic financial institution being new, being innovative, being with agility, that they can really cope with these kind of new demands for Islamic finance, not just to survive, but to be on the lead of innovation and being more flexible to deal with the kind of challenges and opportunities coming with digitalization. Thank you.
I think those statements concludes our session very nicely, Professor Muhyiddin. I wish we have more time. Unfortunately, we don't have much time. We overrun, basically. Hope we can settle these challenges that the speakers already mentioned. Still much of the homework that we need to do for Indonesia, although we have potential. So to answer the question of this session, we have potential, but we still need a lot of to do to materialize the potential. With that, I would like to invite the audience to give a big appreciation, high appreciation to all the speakers today. We learned a lot from this session, and I apologize, we take more of your time. I return to Ibu Yani. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you so much.
Terima kasih semuanya.
Terima kasih Bu Titi.
Sama-sama Bu Dian. Terima kasih Pak Anwar, Prof. To the thank you so much, MCs.
Thank you, Bu. Excellencies, distinguished guests, ladies and gentlemen, before we wrap up, I would like to invite Bapak Mirza Aditya Swara, Senior Advisor to Minister of Finance for Financial Services Policy, to deliver his closing remarks. Ladies and gentlemen, please welcome Bapak Mirza.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon. May peace be upon us all. Distinguished speakers, analysts, ladies and gentlemen. First of all, let me begin by thanking the panelists and the participants for this very constructive conference. In the last 2 days, we have amassed many knowledge and information from prominent persons in Islamic finance field. Through the conference call or paper, we also have produced a number of critical and interesting output or values contributing in developing Islamic finance body of knowledge. I'm confident that this conference series gave a positive impact of capacity and knowledge enhancement to various parties and deeper understanding in Islamic finance. For sure, this conference has exhibited the vital role of Islamic finance in economic recovery, and it is expected to be able to support the national beyond. Distinguished guests, ladies and gentlemen, from the conference, we learned that we are experiencing one of the historical tests in human history and a critical phase of development of Islamic finance. The COVID-19 pandemic has created a critical and notable backdrop and impact in the advancement of Islamic finance, ranging from structural reform, fintech, and social finance. This conference has succeeded in framing a calamity into a positive experience in developing Islamic finance. We have witnessed many countries disbursing astronomous figures from their budgets with many framework and methods, but with one same point of goals, that is to save humanity. Stimulus package was disbursed to support the struggling economies with strong ramification in every levels and dimension of socio-economic aspect. Biggest budget structural reform ever recorded in history. In Indonesia, for example, we managed to save and reallocate 695 trillions or nearly 47 billion state budget to support the National Economic Recovery Program, which focus on health, social protection, business incentive, corporate financing, government programs, and micro, small, medium enterprises. The pandemic spurs catastrophic outcomes, the financial development globally, in asymmetric way, including in Islamic financial sector. In case of Indonesia, it is surprisingly that Islamic finance keep its positive growth rate amidst of the pandemic. In the banking sector alone, Indonesia recorded 2 digits of growth rate of Islamic banking assets, 13.6% on May 2021. Furthermore, the Islamic capital market flourished as being the driver in Islamic finance growth during the pandemic, with large increase of sukuk issuance globally. In Indonesia, as of July 2021, the outstanding of the sovereign sukuk was amounted to 1,076 trillion rupiah, or grew by 10.7% year to date, and is estimated to continue to grow in the future. And to my surprise, the Islamic social finance is thriving even more during the pandemic. But let's not imbue with happiness yet, as the risk of the pandemic is still prevail and threatening socio-economic development. We noted that this conference reconfirmed that there is huge potential of Islamic finance to grow and further develop beyond, driven by rich Islamic values applied in Islamic economics and finance, and also in Muslim society. Islamic values and principles embedded in the Islamic financial sector encourage productivity and competitiveness and form reliable human resources. This value will help to promote economic recovery along in the development of Islamic financial sector. The conference underlined that during the pandemic, Islamic finance is quite resilient with the principle of justice applied and reflected in lost profit risk sharing. The application of risk sharing in any level of economy, including commercial and social, non-profit, is expected to build a strong foundation and create resilient economy in general and small and medium enterprises in particular. Moreover, Islamic social finance, zakat, infaq, and wakaf is a natural economic cushion or safety net so that the economy can still move in crisis condition like this pandemic. In this regard, we also notice the need of synergy and interconnectedness within Islamic economy ecosystem through integration of Islamic commercial and social finance to rebuild the real sector in the future. Furthermore, I also note that theoretically and some evidence in this discussion shows that Islamic finance is positively connected to the real sector that experienced direct hit due to the pandemic. Thus, the development of micro, small, and medium enterprises that represent a large part of the economies, especially the halal industry, through various Islamic financial tools, becoming more important than ever during the pandemic time. We also noted the roles of standard body is to ensure standards and principles to be Sharia compliant, to provide credibility and trust among the stakeholders, to facilitate growth of the Islamic financial services industry, and also how to respond to pandemic, which facilitated digital transformation by providing guidance for Sharia compliant digital financing. This conference has shown the potential in utilization of Islamic financial tools, ranging from Islamic social fund, Islamic microfinance, Islamic crowdfunding, smart contracts, and equity financing. Technology and digitalization will play a critical role in developing and amplifying Islamic finance role in supporting the economy. In microfinance especially, Islamic finance can encourage financial inclusivity with various microfinance programs, especially Islamic cooperative or Baitul Mal wa Tamwil, which are spread all over the country. The development of retail sukuk and wakaf sukuk is other instrument that can also promote inclusivity. Last but not least, I also note that the application of Islamic principles will promote sustainable growth, reminding in mind that in Islamic principles, that the exploitation of natural resources should not destroy environment and social life. Therefore, the development of green sukuk, which has also been issued by the government of Indonesia, is an effort to realize sustainable finance in order to support sustainable growth. Ladies and gentlemen, in conclusion, I would like to suggest several key points that may be worth to concern on how to consider the vital role of Islamic finance in supporting economic recovery. First, a Makassar Sharia fiscal-based framework plays a critical role in the pandemic time, focusing in humanity. While a robust financial system is vital in supporting economic growth or recovery, strong fiscal policy and capital market relations has been displayed evidently in this pandemic time and will continue to develop. Second, Islamic finance is a financial system that is inclusive, ethical, and socially responsible, since it connects the financial sector and the real sector of the economy, so that it is expected to have a vital role in the post-COVID economy, and supporting the National Economic Recovery Program, which enhance the effort to eradicate poverty through community empowerment. Third, Islamic finance has a capability to boost economic productivity, relies on economic resiliency, and support the financial inclusivity and economic sustainability. Fourth, ecosystem development. Ecosystem development approach with close synergy between various parties will optimize the development of Sharia economy and finance. Policy responses, strategy and initiative in accelerating and boosting economic recovery is needed to strengthen the economic structure through enhancing productivity and maintaining sustainability and inclusiveness. Fifth, policy responses, strategies, and initiatives in accelerating and boosting economic recovery is needed to strengthen the economic structure through enhancing productivity and maintaining sustainability and inclusiveness. Afterward, the role will greatly be amplified through the use of financial technology that will strongly link and bind the relation of economy and Islamic financial sector. To simplify, those values are translated into framework of enhancing productivity and maintaining sustainability and inclusiveness. Six, the most important things that would be concerns are how to increase the education and literacy of economic and finance, including the Islamic finance, for increasing the capacity and improving the knowledge of the human capital, as well as the society as market player in economy. With the immense experience and expertise assembled today, let me reiterate my confidence that this conference would be able to facilitate a very constructive exchange of view and knowledge, as well as bring new insights for us. I would like to congratulate for the winners of the call for paper event during this conference. And I hope we can get together, we can get another insight and additional information for developing the knowledge, particularly in the economy and Islamic finance. I hope this conference, memorable of knowledge and insight, has a strong outreach to a vast number of parties and continue to progress in the future. Thus, the messages have been conveyed, knowledge and information has been transferred, and the development progress will continue. With this, I end the 5th Annual Islamic Finance Conference. Barakallah, alhamdulillah. May Allah bless us all. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Pak Mirza Aditya Suara, for your encouraging message. Excellencies, distinguished guests, ladies and gentlemen, we would love to hear your feedback on this conference. Once you leave this conference room, you will be directed to a survey asking for feedback on this event. Your insights will determine continuous improvement of our events and activities in the future. You can click the link written on the screen and also written on the comment sections of our virtual room and YouTube channel. You can also scan your camera to the QR code on the screen for access to attendance, presentation materials, as well as to our survey form. You will be eligible for a certificate of attending this conference if you have completed the questionnaire.
Excellencies, distinguished guests, ladies and gentlemen, as we bring the 5th AIFC to a close, on behalf of the organizing committee, distinguished speakers and moderators, we wish to extend our gratitude to you, our dear participants, for making this two-day conference a huge success. We hope that this conference has created us a better opportunity to harness the values contained in the Sharia economy and finance, namely solidarity, socialness, fairness, collaboration, and equality, not only to help lift Islamic finance to full potential, but also to play a more important role in economic recovery during the COVID-19 pandemic. This is all the time we have for today on the 5th AIFC. It's been a pleasure with you today. I'm Lisa.
And I'm Risminda.
We're both signing off. We wish you all a very wonderful day ahead and wassalamualaikum warahmatullahi wabarakatuh.